Good evening all. Today we are gathered here for this awareness outreach program for the public sector undertakings under the Income Tax Act 1961, and we have with us the income tax officials. May I request Chairman Bangalore branch to please escort all the officers to the dais and offer them a floor bouquet. Members, let's have a round of applause. We'll have a committee report. I request committee members to join us on the dais for the photo. I request Chairman Bangalore branch, C. Manjunath Nalur, to give his welcome address.
Good evening, members. Good evening, department officials and my dear public sector undertakings, CFOs and finance directors and then manager finance. Here, on behalf of Bangalore branch of SISF ICAI, I extend warm welcome to one and all here. All the distinguished officers, Shri.Priyadarshi sir, Additional Commissioner, Shreenivasa sir, Deputy Commissioner, and both income tax officers who have come here to deliberate upon the importance of compliance by the public sector undertakings. This will be a 3-hour session, and this awareness and outreach program has been organized with a clear purpose to enhance understanding of key provisions of the Income Tax Act 1961 and to support the public sector undertakings in ensuring smooth, transparent and compliant tax practices. Our public sector undertakings play a vital role in nation building, and it is our collective responsibility to ensure that tax procedures are followed with clarity and confidence. We are privileged to have experienced income tax officers with us who will be sharing important insights, practical guidance and recent updates. I encourage all public sector undertaking representatives and participants to make the best possible use of this platform, ask questions, seek clarifications and engage actively throughout the session. Once again, I warmly welcome each one of you. Thank you one and all for joining us, and I hope this program proves meaningful, informative and beneficial to all of you. Thank you once again. Welcome you. Thank you.
Thank you, Chairman. Now I would like to introduce all the officers on the dais. I have a privilege to introducing today's speaker, Shri.Priyadarshi Mishra, Additional Commissioner of Income Tax, Range 4. Shri Mishra, an Indian income IRS officer of 2008 batch, is currently serving as the Additional Commissioner of Income Tax, Range 43, Bangalore. A native of Cuttack, Odisha, he holds a degree from the Delhi School of Economics and Campus Law Center, New Delhi. He has served in key roles across Delhi, Bhubaneswar, Bangalore, contributing significantly to course enforcement functions of the Income Tax Department. He has led several successful search and seizure operations resulting in detection of undisclosed assets and income worth over 2,000 crores. He also played an instrumental role in the effective enforcement of election rules during the Karnataka Assembly elections 2023 and the Lok Sabha elections 2024. His interest includes traveling, debating and listening to music. With this brief introduction, I present before you Shri.Priyadarshi Mishra. I would like to introduce our second speaker. I have the privilege to introducing the second speaker, Shri.H. Shreenivasa. He is an IAS officer, Deputy Commissioner of Income Tax for the Circle 432, Bangalore. H. Shreenivasa holds a BSc Agriculture for the University of Agricultural Science, Bangalore, and an LLB from Mysore University. He began his government services as an inspector in the Central Excise in 1994. In 1995, he joined the Income Tax Department as an inspector at Mysore. Over the course of his career, he has served in diverse locations include Hassan, Shimoga, Ravangeri, Paniji, Nagpur and Bangalore, contributing to a wide range of functional areas. He was promoted as Income Tax Officer in 2005, Assistant Commissioner of Income Tax 2018 and Deputy Commissioner of Income Tax 2025. He has worked extensively in assessments, investigation wing, salary circles, company ward, headquarters, tax recovery office, intelligence and criminal investigation, verification units and other important verticals, gaining comprehensive experience in core departmental functions. With that, I introduce before you Shri.H. Shreenivasa. I do have the privilege to introduce the third speaker, Shri Dhiman Sinha, IT officer. Mr. Shah, an MCA graduate, joined the Income Tax Department in 2009 as an Inspector of Income Tax. Over the years, he has gained extensive experience across multiple domains, including business frauds, tax recovery, and other core functional areas of the department. He is known for his dedicated services and versatile understanding of the operations and enforcement processes within the department. With that, I present before you Dhiman Sinha. I do have the privilege of introducing our fourth speaker, Shweta Bakshi. Mrs. Shweta Bakshi is an income tax officer currently serving in Ward 431, Bangalore. She has joined the department in 2008 as the tax assistant and through consistent dedication and professional excellence rose through the ranks to become the income tax officer in 2025. Known for her diligence, integrity and commitment for public services, she continues to contribute effectively to the administration of the direct taxes. With that, I present before you Shweta Bakshi. Mishra sir.
Good evening to all of you. My respectful thanks to the dignitaries of the dais first, especially Mr. Manjunath, for having organized this function at a very short notice. In fact, I think the preparations for this program started only early previous week. And by Monday it was crystallized. Monday of this week it was crystallized. So we effectively worked in 4 days of time. And credit for this also goes to our Deputy Commissioner and our core team, because the invite was sent to a lot of public sector participants. In fact, one of the main objective behind conducting this program is to clear certain doubts and misgivings that many times arise between both sides. It could be because of lack of understanding, it could be also because of lack of communication. So we thought this outreach program is a very good opportunity to clear the misgivings, if any. whatever are there. As many of us present here would be aware of the fact that departments functioning, the revenue departments functioning, especially income tax departments functioning, has undergone a substantial change from 2020 onwards, the year when COVID struck India and the world in general. Things have become faceless. In fact, the proceedings that used to be conducted earlier in a physical manner have become faceless, except for some verticals like search and seizure, international taxation, where it is still in a non-faceless manner. But largely the department has become faceless. Now, first of all, we should be clear in our understanding of what this faceless assessment is. Faceless, as many of us understand, it removed the interface between the department and between the assessing officer and the assessee. The assessing officer in our department is the key fulcrum of the department. Like in the IAS, we have the district collector. Similarly, in the revenue service or in the income tax department, it is the assessing officer. The entire Income Tax Act, if any of you would have seen how big and thick that act is, that act revolves around assessing officer only. And we, the supervisory officers, we have statutory functions to play, like the additional commissioner, principal commissioner, but as per law, the assessment order can only be passed by the assessing officer after taking approval from the seniors, supervisory officers like myself or principal commissioner, whatever be it. So, the government thought of experimenting, the government thought of making some changes in the way the assessment procedure was conducted. So they brought this faceless assessment. Now, one of the most important things that the government wanted to do was, one, A, remove the interface, B, make the submissions all electronic, and C, also provide for faceless appeals. So, faceless assessment got extended to faceless appeal. The only place where you can get a physical hearing as far as the appellate stage is concerned is the ITAT, the appellate tribunal. As far as CIT appeals role is concerned, you can still have a request for a virtual hearing. You can go for a what you call VC request. You can place a VC request, video conferencing request, even before assessing officer, but there are some technical glitches when it comes to making a hearing before assessing officer. But at the same time, faceless also has removed some disadvantages which earlier people used to face. For example, coming to the tax office so many times, or if suppose the officer was not there on that particular day, the taxpayer may be coming to the office but may not be able to find the assessing officer. But with electronic technological advancements, you could file the submission sitting at your office itself. So one of the most important advantages of faceless is that geographical distance has been brought down, and also transparency has been introduced. In fact, the Indian Income Tax Department is one of the few revenue departments in the world which has become completely automated and faceless. I don't think even advanced countries like UK and USA have complete faceless mechanisms. Except for investigation and search and seizure assessment, by and large everything has become faceless. And international taxation also, because certain cases are such that you need to come and explain across the table. That is why the government in its wisdom thought that everything cannot be made faceless. Okay. Now coming to the role of taxpayers. Whether the taxpayers have taken this opportunity as an advantage or as a disadvantage, that I would like to hear from you towards the closure of the program. Like, how do you perceive this faceless assessment? So that we would keep it reserved for towards the end of the program. The other thing that comes to my mind is many a times we always think of rights. It's like, I have a right to do this, I expect this from the government, but equally we also have a duty. Every right comes along with a set of duties. Now, if any of you would have seen, we have something called as a taxpayers charter. It is a public document which is available in Google also. You can search the document published by the department called Taxpayers Charter. Now in the Taxpayers Charter, there are a set of rights and duties which are prescribed. What the department expects from the taxpayer and what the taxpayer in turn can expect from the department. So it is a two-way process. Now when it comes to expecting things from the department, I think many of you would be expecting that my assessment should be conducted in a hassle-free manner. I should be given a proper opportunity of being heard before something is held against me. Because after all, assessment proceedings that we carry out are just like judicial proceedings you have in a court of law. So the representation is also made by a professional from the assessee side, be it an advocate or a chartered accountant. So you have a right to be heard. but equally you also have a duty to comply with the statutory notices that are being issued. So I cannot only say that I have a right to be heard, I also have a duty to cooperate with the department in disclosing my affairs truly and correctly. The first stage of interaction with the department comes when you file your return. Every year you file your income tax return, there is a due date to file. For individual taxpayers it is 31st July. For corporate taxpayers who are audited it is either 30th September or 30th October, depending on whether the due date is extended or not. So whenever you are filing the return, for example, many of the participants here are belonging to PSUs. So I think as per the Act, both as per the Income Tax Act and also as per the Local Bodies Act, you are supposed to get your books of accounts audited. So only when you conduct the audit of your books of accounts, then you can file the tax return. My advice or my request, our request to you is that please get your books of accounts audited by the local auditor or statutory auditor, whomever the corporation has appointed, well in time, because that will enable you to file the returns before the due date. The law says that you have to get your books audited and get the certificate of 44AB, that Form 3CB and Form 3CD. And now the law is changed to say that it has to be filed just exactly 1 month before the due date of filing return. Many a times it has been noticed that the return has been filed but the audit report has not been filed. The accounts are audited, but for some technical reason the audit report could not get uploaded. It is still understandable that there were some technical reasons because of which the audit report could not get uploaded, but there are instances where audit report has not been uploaded because of some other reason. So in such circumstances, one thing which can come to your rescue is there is a provision called condonation of delay, wherein you can approach the jurisdictional Commissioner of Income Tax or even Chief Commissioner of Income Tax for getting the delay condoned, because unless and until the audit report is filed, your return will not be processed, or even if the return is processed, it will result in a demand. I am sure many of you would be aware that there is something called as 80IC or 80IB. These are special provisions of the Income Tax Act where the government has given incentives to certain sectors to carry out economic development or economic activities in certain backward areas. For example, Karnataka Niravari Nigam, I don't know whether any representative from Niravari Nigam is present here or not, or some PSUs who have a special mandate to carry out some welfare activities. Now, the government itself wants you to go and carry out some developmental activities in the backward areas so that economic development gets an uplift. But for doing that, you also get a tax incentive. For getting that tax incentive, it is equally important to file the return on time. If you do not file the return on time, you miss out on the tax incentive that you are otherwise entitled to. Okay. Now, any tax incentive is always a matter of verification. As many of you would be aware that 99% of the returns are voluntarily accepted. Only 0.1% of the cases, even it is now less than 0.1% of the cases are selected for scrutiny. Scrutiny is the stage where the department engages with the taxpayers more intensively. That is where the assessment proceeding begins. That is when you pass the assessment order, then you go for appeal. All those things start from scrutiny proceedings. But otherwise, 99.5% of the returns are accepted as being true and correct by the department. That is in fact the emphasis given by the government, where the government wants voluntary compliance. So when 99% of the returns are being accepted without questions asked, so I think the taxpayer should avail that opportunity to faithfully and truly declare the income that has correctly been earned by that person in that year. Of course, if there are some issues on which two views are possible, you can always consult your chartered accountant or your tax consultant where some debatable issues are there. And if you have taken a view which is supported by some judicial decisions, you are entitled to take that view. Maybe department can question that view later, but nothing stops you from raising that claim unless and until it is found to be entirely false. So I repeat again what I said, you can raise a claim in the return of income provided there is a stand which supports it. If there is a judicial decision or if there is a case law of the High Court or of the Supreme Court which supports that stand, you can take that stand. Because as you know that even the dispute mechanism process in India is an evolving process. Today ITAT may say one thing, tomorrow the High Court may reverse it. High Court may say one thing, the Supreme Court may reverse it tomorrow. So unless and until the law is crystallized by the highest court of the land, that being the apex court, it is always, litigation is an evolving process. Even we in the department, if one view we have taken today, we may change it tomorrow also, subject to, change of jurisprudence. And tax litigation is the most complex litigation. I'm sure many of us would agree here, tax litigation has actually given rise to so much of disputes. I mean, I'm saying both on the positive side as well as negative side. In fact, litigation is an inevitable process. We can't avoid litigation because ever since mankind has come to society, litigation is there. Two people will fight over whether I have the right to share this river water or Tamil Nadu has the right over Kaveri. So litigation is there ever since human evolution. So litigation we can't prevent, but we can certainly avoid. Wherever there is a scope to come clear on our activities, we can certainly reduce avoidable litigation, right? And that can only happen when I take proper advice from my tax consultant. So it is equally important that the tax consultant renders a correct professional advice. The advice may turn out to be improper tomorrow based on some change of law or judicial decision. But at the moment if the tax consultant renders an advice and there is a precedent for it, I think you can go ahead. You need not worry about whether my case will be rejected tomorrow or not, because in law you are entitled to take a view which is supporting you. It is not necessary that every view that you take may be subjected to penalty proceedings tomorrow, because I will not make it very technical, but I will make it a rather general proposition that for imposing penalty there is a very high standard that is expected from the department. The department in a way has to prove that there was concealment or deliberate mens rea or guilt on part of the assessee. Unless and until that standard is met out, the case may not stand in a court of law, higher court of law. So therefore, maybe I can give one example, 14A for that matter. 14A, many of you would know, has gone so much of litigation, has seen so much of litigation, that now I think more or less the law is settled. Max of investment of Supreme Court, that decision is there. What you can claim and what you cannot claim. Likewise, one common example I can give is employee provident fund contribution, ESI contribution or provident fund. Previously the position was that if as an employee the employer has deducted my part of the ESI or EPF but has not deposited it with the Provident Fund Authority. Provident Fund Authority has a due date under which the PF deposited has to be deducted. Some assessees were taking the stand that okay, I have missed out the deadline for depositing under the PF Act, but I deposited it before the due date of filing IT return. So that deduction may be allowed to me. But now the law is very clear on that point in the checkmate decision of Supreme Court that you have to follow the law as is there under the respective act, that is ESI Act, PF Act. So which means when the position earlier that was that yes, I can take a view because Karnataka High Court decision is there which is supporting me, or maybe ITAT Bangalore decision is there which says that okay, even if you have deposited it under the respective act's due date, if you have not deposited but you have deposited before the date of filing IT return, I can still claim that deduction. But now the law is settled that you cannot claim that deduction. So therefore, if you knowingly claim that deduction, then definitely the department is going to ask you, is going to scrutinize your case. So making a false deduction knowingly and with full knowledge may invite prosecution also, prosecution and penalty. Because the moment I am filing my return, many of you would have seen there is a verification column there, appended at the end of the return, that whatever I am declaring is true and correct to the best of my knowledge. Knowingly fully well that I have raised an incorrect claim, when I know that the claim is not supported by law, and also the Supreme Court has clarified the legal position, then it may land me in trouble. Because I cannot claim a false deduction, which is otherwise not allowed. But I can claim a debatable deduction. So as far as debatable deduction is concerned, that is still understandable. But claiming a false deduction is just not permissible. I hope I have made myself clear. So as far as the public sector undertakings in particular are concerned, I will again emphasize on the importance of timely filing of the income tax return. Because if you file the income tax return within the due date, you can get whatever benefits the law is allowing you to. If suppose you have a claim of carry forward of loss, carry forward of loss will not be allowed unless and until you file the return on time. If for some reason you fail to file the return on time, then you can apply for condonation of delay. But condonation of delay is again a discretionary provision. Condonation of delay does not guarantee you an automatic success unless and until you come with very solid and substantial reasons. So in fact, I think many of you would be aware. If you are not aware, then I'll just take this forum to tell you that there is a CBDT circular number 11 of 2024 dated 1st October. The circular is issued by CBDT. this circular is the most comprehensive circular on condonation of delay. Like under what circumstances can an assessee file a condonation of delay application? And it very clearly says that this condonation petition can be filed maximum within a period of 5 years from the end of the relevant assessment year. That means you have time up to 5 years. Any belated condonation petition beyond the expiry of 5 years is gone. So at the threshold itself it will be rejected. So you have time only up to 5 years from the end of the relevant assessment year, within which you can file the condonation petition. And equally, while filing the condonation petition, what is expected is you should give a very valid and compelling reason, because the language used in the circular is genuine hardship. Like what prevented you from filing the return on time? For example, how can I think I can give you a very relatable example. It may happen, it may not happen also. How many of you have jumped traffic signals? I think very few, because the enforcement mechanism is very strict. If you jump, then they will give you a challan. So it is just like saying that today I missed the deadline, department did not question, but tomorrow department may question. So it is always necessary that I should stick to the deadline, and especially when public sector undertakings are arm of the government, one government organization should respect the other government organization. Because the income tax department is one of the most important organizations of the entire government of India. Revenue collection is like the backbone of any administration. So if the PSU, which is also an important arm of the state government or central government, if they themselves do not follow the law, what moral authority do they have to expect compliance from the citizens? Do they carry any moral authority to expect compliance from citizens when they themselves are violating the law? So that's the bigger point which we are supposed to look at. If for some reason I could not file the return on time, I can still file the return provided I have a valid reason for not filing. So this condonation mechanism allows you a opportunity where you can come up with a valid reason. What prevented you from filing the return on time? Or maybe you have filed the return on time but you have not uploaded the audit report. It has also been noticed in many cases that audit report has not been filed. Or even if it has been filed, it has not been verified in the prescribed manner. What generally happens is, I tell you, as I said, 99% of the returns are automatically selected. They are not subjected to scrutiny. So when this goes to CPC, Bangalore, Centralized Processing Center, Bangalore, they have their own algorithms. CPC, all the functions are automated. So the algorithm will decide in a way whether the claim is to be accepted or not. Now, as many of you know, the algorithms are also designed by human beings. The algorithm will have some accounting feature, some legal feature inside it. Maybe the algorithm is not up to date with the latest judicial decisions. That is something that needs to be updated. But till the time the algorithm is not updated, the algorithm will not allow you the benefit of carrying forward that loss. Or algorithm will not allow you to claim, for example, if you are a charitable organization, if you are doing some charity, you are an NGO, you are recognized as a charitable organization, you have got a 12A certificate from the government, you have got a ATG registration, but you have not filed the form 10B. 10B is again an audited document. You have to get your accounts audited and file the form 10B. If the system sees that you have not filed the form 10B, it will straight away disallow it. But before disallowing, they will give you an opportunity, they will give you a show cause. But again, from practical experience, it has been seen that CPC, whenever it makes any adjustment, it does not give reasons why it is making adjustment. So it results in a vicious cycle of litigation. So what I am trying to say is a litigation which can be prevented from happening. Why to create it in the first place? If maybe we become more vigilant and alert towards our duties and responsibilities, we can prevent precious resources of the government and precious time from being wasted, right? You are fighting a litigation. Equally, we are also fighting that litigation. I mean, we also have this responsibility of collecting that tax. Many times we know that this demand is unreasonable, but till the time that demand is knocked down or it is reversed, that demand is still collectible in our books, right? It is an area demand for us. So the government will tell us, okay, even if it is 10 crore rupees or 10 lakh rupees, it is still something that is due to the government as tax collectible. So this is where the problem happens. Many of this can be prevented if we are more alert. We file the audit reports on time, and we tell our staff, intern, or we tell our accounts and finance section personnel who are looking after the audits and all that to stick to the deadlines. Because if deadlines are not stuck to, then these problems will be happening. And I know many of the corporations are being run, the managing director is an IAS officer or a KAS officer. They have 100 other things to do. So I am telling the the professionals, the accounts and finance CFO or whoever is present from the accounts and finance team of the PSUs, this is where your role comes. You have to sensitize the staff who is working with you, because as leaders you have to take the responsibility. And also, if you feel that there is a need to engage with your tax consultant or professional on some legal issue, you are always free to discuss with them. In fact, we had a case, I will not name that case, where the issue was again of condoning the delay. It is again a state PSU. Some fraud had happened in that particular organization with respect to some fixed deposits. So because of the fraud that happened, the return could not be filed, and that organization was having huge losses. That organization wanted the carry forward of loss, but it is not possible till you file the return. So the only remedy, and they also could not file the revised return. I am sure many of you would be aware of what is a revised return, what is a belated return. Original return, there is a deadline. For revised return also, there is a due date. If you could not file the revised return, then this particular case that I am talking about, they could not even file the revised return. So that means the claim of loss carried forward was not allowed by the department. So they were faced with a very difficult situation of facing the demand proceedings. And equally, we were also faced with a difficult situation of recovering that demand. So what is the best possible way out? They filed a condonation of delay petition. So I don't know whether the condonation has been accepted or not, but the reason that they gave was because of the fraud committed in the organization, our fixed deposit, all those things was misappropriated. There was a forensic audit that was conducted in that particular PSU, as a result of which all these shortcomings were detected. Then a new accounts team was appointed. That particular fellow has been charge sheeted by the Vigilance Department, by the ACB. So whatever, I think the case is going on in the ACB court. So I'm just saying this is one example. There could be many more also. So this happened because of the involvement of some personnel from inside. But these things can also be prevented if we are more alert and careful. In a way that the responsibility is shared. It cannot be centralized at one place, right? So the finance and accounts team of PSUs have a very important role to play. Because I think in the scheme of things, questions will be asked from you that why this particular thing has been disallowed by the department, why you could not carry forward the loss. Am I correct or not? Where is the answerability fixed? On the finance and accounts department, right? So finance and accounts department also have to understand that they have to comply with these obligations very seriously. Okay. Now coming to another aspect which we thought, and my colleagues will also be discussing thereafter. Another aspect which I thought is important from the outreach point of view is how to respond to these statutory notices in faceless proceedings. Okay. Now, statutory notices as and when they are issued, as many of you are aware that it is issued on the registered email ID, which is available on the e-filing portal. So, it is expected from the taxpayer that you please check the e-filing portal regularly. Whatever updates or emails are coming from the department, I think you also get an SMS update on the registered mobile number of the taxpayer. So, please be in the habit of checking the mails, because one opportunity missed can land you in big trouble. The assessing officer will not close the proceeding with one notice. The assessing officer will give you at least 3-4 opportunities. Now, if all those opportunities are wasted by not complying, you unnecessarily land up in a situation where you go for further appeal. Maybe the appeal can get dismissed also. Another problem that I have seen in appeal is the appeal is filed belatedly. As per the law, the appeal has to be filed within 30 days of the passing of the assessment order, meaning the assessment order is served and passed. Within 30 days from there, you have to file the first appeal. Many times it has been seen that even the assessees are not exploring this opportunity of filing the appeal. They wait for 3 years, 4 years, and then suddenly when they get a recovery notice from the department, they wake up and then they file a belated appeal with a condonation of delay provision. Condonation of delay. And as I said, condonation of delay is a discretionary provision. It is not automatic that by filing a condonation your appeal will get admitted. Unless and until your appeal gets admitted, you are nowhere there. you will be there at the threshold. So then the remedy before you could be either approaching the ITAT or filing a writ before the High Court. But equally, please make sure that if you have not responded to assessment proceedings, explore the option of filing appeal quickly within the due date. Because many of these orders where you do not respond to the notice issued by the department, they result in ex parte assessments. These ex parte orders are actually difficult from both sides. Now what happens in ex parte orders is, ex parte is like in the absence of the other party. We call it ex parte. So in ex parte proceeding, what happens is the demand is raised because the assessee does not cooperate. If the assessee does not cooperate, the assessing officer has no option but to conclude the assessment based on material available on record. So with the material that he has to conclude the assessment. And assessment in our department is a very specific time-led proceeding. Many of you would be aware 31st March is a time-barring date for our officers. So by 31st March, the assessment proceedings have to be closed on or before 31st March or 31st December, depending on how the Act has been amended. A few years back it was 31st December, but now it has been made 31st March. So if you do not respond even till the last day of March, the assessing officer has got some 300 cases in his work list. 300 scrutiny time barring cases, 200 scrutiny time barring cases. So the assessing officer is just like a judicial officer. Like a judicial officer has so many cases to dispose in a court of law, the assessing officer also has got his workload of 300, 400, and then on the top of it, he is also an administrator. He has to do recovery proceedings, he has to do taxpayer service, he has to do 100 other things. Assessment is only one part of his job. He has got so many other roles to discharge. So, as taxpayers, don't you think that it is your responsibility to cooperate with the department as far as timely submission is concerned? Unless and until we make timely submission, I think we are also getting deprived of a very good opportunity to represent our case. Unless we represent our case, I think if we represent our case, half the battle is won. If we do not represent our case properly, I think we are headed for something very, uncertain. Because CIT appeal also is faceless. The appellate proceedings are also faceless. But there at least you can request for a VC. You can have a video conferencing. But for video conferencing to take place, first of all the appeal has to be admitted. So the first threshold is to have the appeal admitted. If you do not file appeal within 30 days of time, 30 days of the date of assessment order, date of service of the assessment order, then you are also not sure whether your appeal is going to be admitted or not. Now I can give you an example. Suppose in the assessment order a demand of 1000 crore has been raised and that demand notice is served on you. You do not comply to that demand notice, you sit quietly over it, you do not file an appeal. Then you know what happens? The interest and penalty piles up. The penal interest on that is I think what, 1.5%, 220 interest is piling up. The penalty also can get added for non-compliance. So point is, why should I not comply? What prevents me from complying? So please check your mails regularly. In fact, the first point of interaction with the department via faceless is emails. Because the faceless officer does not know you, you do not know the faceless officer. You know your jurisdictional officer. Now let me clarify this. As far as assessment is concerned, it is faceless. Everything after assessment is from the jurisdictional officer. That means, if suppose you want to file a rectification application, you want to file a condonation of delay application, you want to get a tax clearance certificate from the department, you want to get some NOC from the department, you have to approach your jurisdictional AO, JAO. Right? So that is decided based on PIN code and territorial jurisdiction. So only to that extent it is faceless. But beyond assessment, everything is with the face. So you can come and interact with them. Nothing has prevented you from coming and interacting with your officer. So faceless is only for conducting the assessment proceedings. Faceless does not mean that after the assessment is over, you cannot meet your officer. I think many of us should be conceptually clear on this. Many times what we have seen from our experience is, suppose your appeal gets admitted and you file some evidence before the Commissioner Appeals which you had not filed earlier before the assessing officer. That evidence or document which you have filed before the Commissioner Appeal is an additional evidence. Under Rule 46A, it has to be remanded back to the assessing officer for his perusal and comments. So which means the case gets remanded back to the assessing officer. because you did not cooperate during the assessment proceedings, or you could not file that document before the AO during assessment. Now you are filing that document before the appeal, Commissioner Appeals. But Commissioner Appeals cannot adjudicate on your appeal unless he remands the matter to the AO. So remand is a very good opportunity for you to come clean on your affairs. Meaning thereby, when the assessing officer issues your notice in remand proceeding that please come and explain me, because before he gives the remand report, he has to hear the assessee. That is a very good stage to avail that opportunity. You can come and physically explain things across the table. Or if you do not want to come physically, at least you can file those documents electronically also through e-proceeding. But there also, if you do not cooperate, then the assessing officer again will give the same report that I could not verify these issues because of lack of cooperation from the assessee. So what I am trying to say is remand proceedings is a silver lining. It is an opportunity. As they say, there is light at the end of the tunnel. So the tunnel may be very dark, but there is still a light at the end of the tunnel, right? So take the remand proceedings as light at the end of the tunnel. Remand proceedings may you can always come and explain your stand before the AO, right? You may not be aware that the case has been remanded to the AO, because in faceless, the assessee does not get to know whether the case is remanded to the AO. But the AO knows. And how do you know that your case is remanded? When the AO issues you a notice to appear. So in fact, that is the best opportunity for you to come and explain what were those documents which you could not file during assessment, but you have filed it now. So therefore, if faceless is there on one side, there is also the opportunity given on the other side. I am sure many of you have grievances with faceless, we know that. But equally at the same time, when this opportunity is given, why don't you avail of that opportunity? So this is where the duty of the taxpayer also comes. The duty of the taxpayer is also to assist the department in arriving at true and fair income. And true and fair income can only be arrived when both sides engage in a dialogue. It cannot be a one-sided process. You may have your view on a certain thing, we respect that view. That is why litigation happens. But equally important is that you come and explain it. Maybe the assessing officer could get convinced. If the assessing officer finds merits in your claim, the assessing officer can very well say that, okay, I have examined the claim of the assessee. It appears to be a genuine claim. Like that, the assessing officer can also say. Then the appellate commissioner can take a view. But for the assessing officer to take that stand, what is necessary is that the assessee should come and explain it. If the assessee wants to come and explain it physically, you are always welcome, because the department, as I said, is faceless only to the extent of conducting assessment. Anything after assessment is not faceless. You can still come to the department and you can have queries with your PAN, you can have queries regarding anything. They are there to assist you. Okay. But please cooperate with the department when it comes to submission of documents, when it comes to responding to any legal notice that is issued. Now next part I feel important is recovery proceedings. Now I understand that many times in recovery proceedings, when the demand notice is issued to you or the letter goes for payment of tax, you can file for stay. But as per law, stay, if you file, then you have to still pay 20%. There is no automatic stay of 100% of the demand, because you are in first appeal. So when you are in first appeal, you have to pay 20%. If otherwise you get a complete stay, that's a different thing. But as per the requirement, you still have to pay 20% of the demand. That 20% can be paid at one go, or it can be paid in lump sum also. I mean, in installments also. You can also tell the assessing officer that there are some refunds which are due to be paid to you. Those refunds can get adjusted against the outstanding demand. But again, that will happen only when you come forward with some kind of a submission. The assessing officer, AO, is not going to voluntarily give you installments. You have to apply for installments. You have to make out a case of financial hardship. So therefore, when you apply for stay, please ensure that the stay applications are drafted in a very reasonable manner. Meaning thereby, the stay application should actually make a ground for granting stay. Merely saying that I am in appeal will not grant you, you will not be eligible to grant stay, because appeal is obviously your right, but equally important is collection of revenue also. So therefore, that is why the government in its wisdom thought that 20% has to be collected at the first appellate stage. Unless and until it is completely knocked down by any higher authority, then 20% is still collectible. Or it's okay, if not 20%, then maybe the installment can be worked out at 10% also, or 5%, depending on the financial hardship faced by the assessee, or if it is a case of high-pitched assessment, then it can be referred to the high-pitched committee. So all those things are there, but my point is that these things can only be meaningful if there is a dialogue between both sides. Unless and until there is a dialogue, I think all these things that we are talking of would be meaningless. Okay, so for the dialogue to take place, what is necessary is the participation from the other side. Because the assessing officer is doing his duty of informing you, keeping you informed by sending you notices, by engaging with you through your chartered accountant or through your whoever, CFO or whatever. But till the time there is a response coming from the other side, substantial progress won't be possible. Okay. And the other thing I felt important was reporting of income again. Now, if there is a claim of carry forward of loss and subsequently there is a positive income, the carry forward of loss may not be there every year. Some year it may get reversed and there could be a positive income. So please file the return even if there is a positive income. For claiming loss, it is mandatory to file return of income. For positive income also, you still have to file the return of income within the due date. And wherever you feel that some tax has been incorrectly deducted, some TDS has been incorrectly deducted on that income which is otherwise not liable for taxation, then you can apply for a low deduction or no deduction certificate from the TDS officer. Or you have to get your 26As corrected. Unless these things are done, the tax credit will not be allowed to you. And you can always approach the jurisdictional officer for rectification of demand. If for some reason you have paid the tax under a wrong head, so you can request for challan correction. So once that challan correction happens, the demand will get reflected under the correct head. Another way where you can have your grievance settled is through CP grams. I hope many of you will be aware of CP grams. So in CP gram also, you can raise that grievance, but please be sure that all kinds of grievances are not redressable. So you have to be very sure about the nature of grievance. I mean, you can't say that I didn't get my ration card, please help me. So these kind of grievances are out of the ambit of the department. Okay. The other day we were seeing one grievance where somebody is saying my appeal is not getting heard or disposed of. What do I do? The assessing officer can't do anything there. You have to specifically apply for early out-of-turn hearing. So therefore, while raising a grievance, you also have to be very sure about what kind of grievance you are raising. Because CP gram, the time given is 21 days for resolution. And our practical experience is such that our officers tried their level best to resolve it within 21 days, but many times it gets delayed because of CPC, because of software glitches. So that is something that we are trying to rectify. To a large extent it has been rectified, but there is always a dialogue that takes place between the AO, the assessing officer, and the CPC. Through web meetings, through raising of tickets, all those things are there. So generally, by and large, the grievance gets resolved. If not within 21 days, then within, say, a reasonable period of time. So even in CP grams also, if the assessing officer has some query, or if the assessing officer wants certain claims to be addressed or verified, please cooperate with the AO. The other area where you can cooperate with the department is order giving effect proceedings, OG. Now in OG, I don't know whether many of you are aware or not, when you get some appellate order from the CIT appeal or from the ITAT, appellate tribunal, you have to read that order very carefully. If the ITAT has remanded the matter back to the AO with specific direction to produce some documents and have the verification conducted, then it is also a time-barring exercise. The AO gets some 9 months, I think, from there. So within those 9 months or 3 months, you have to again produce those documents because it is for your own benefit. It is for your own benefit that the tribunal or commissioner appeal has remanded the matter back. So you have to avail that opportunity. So the sum and substance of all of this is, if I have a right, I also have a duty. My duty towards the department should be reflected in my actions. And these outreach programs, why the department is conducting is because we want to educate and sensitize the taxpayers. Because there is a lot of ambiguity, confusion on both from the other side. So we want this outreach program to be meaningful so that they understand what are the compulsions of the department, they understand what are the expectations of the department, and equally the department would understand what are your difficulties. So this is a viable mechanism of understanding each other's concerns. So with that, I would end my address. Now I request Mr. Shreenivasa, our Deputy Commissioner, to make some specific presentations on public sector undertakings, the areas that are important for PSUs. I have given the broad, outline covering everybody in particular, general here, not only PSUs but everybody who is present here, because you and I, we are also taxpayers. So what is applicable to you is applicable to us also. So therefore, the message of my program was for the benefit of everyone present here. Now he will make it more specific as far as the PSU audience is concerned. So I invite you, Mr. Shreenivasa.
Especially addressing the public sector units as already explained by our additional commissioner sir. So this is an occasion to address these public sector units which are having some unique problems in the income tax matters, especially because the issues will be different in each kind of assessees. So if you go through Income Tax Act, salaried people will have different problems and business people will have different problems. Likewise, these public sectors will have different kind of problems which need to be addressed. So based on that, as far as possible, we have planned this outreach program, and some of the most commonly noticed problems are being addressed in this. And this is mainly intended to address the public sector units. However, since many of the chartered accountants are also addressing, some of the common issues are also being taken up in this. So, of course, to begin with, I hope everybody can see the screen. If it is a problem for you, please come forward so that the forward chairs are filled, so that we will also have better motivation to speak and all. So, if you remember, there is one comedian by name Pranesh in Kannada. So he always says, so these speakers always get motivated by the audience only, by their movement, by their response only they will get the motivation. If you can come forward please, it will be always good for us. So now, to begin with, now this program is being conducted as I have already told you. So today there are certain topics which need to be discussed. As I have already told you, public sector units are being addressed today. So here some basics of income tax, like basic concepts and other things will be discussed in the interest of everybody. And so other issues also will be addressed. Common issues of public sector units will be addressed. Then we will discuss. We will have discussions. Now, if you see what is a public sector and all, so this overall view will tell you what is a public sector and all, as already explained by our additional commissioner sir. In the course of industrialization and all, right from the beginning, these industries have been established and that is run by different units. Usually these public sector units are owned by the government. Here what we are today talking is the public sector units mainly owned by the government of Karnataka, means state government undertakings, and not other units usually, because over such units our circle has got jurisdiction where a lot of returns are being filed and also rectification issues and OGE and other issues are being addressed. So with a view to address their problems and all, we are conducting this. So here of course they have got a definite role in the state economy. They contribute a lot towards the state economy also. Now of course there are so many areas which can be seen, like these unlike these private companies which also run similar kinds of businesses or activities, these will have some unique features. So here actually we may have to see some of the aspects like taxability of these grants, subsidies and compliance burden, as explained our additional commissioner sir, what you have to reply, when you have to reply to your notice, all these are compliance issues. So these need to be addressed. Then again this profitability, how this taxation issues are to be seen. Then Now we will begin with some basic concepts in the interest of all, so that everybody will look into this. Of course, this is since this is from Income Tax Department, we will first see this applicability of Income Tax Act. All of you know this since this is an old act since 1961. So here actually it extends to whole of India, all that you can just go through. Then this is another important topic, because here whatever we discuss, it is income tax means actually income is only taxed. What is income is always explained as per section 224 of the Income Tax Act. So it includes all these things. You can go through profits and gains of business, dividends, all these contributions, all these are there. Why I am telling you is, here we will be discussing on certain issues. So in that, actually to discuss that issue, that should form a part of taxable income, means it should be coming within the purview of section 224, then only it can be brought to tax. So then only we can discuss on that taxability of that income. So here it includes capital gains, all this banking business, then winning from lotteries, then deemed income provisions, of course. So then the employee contributions. So many things are there. If it is not paid within the due date, then it becomes taxable income. That becomes this one employee contribution is also one such thing. Then amounts received from some of the insurance, including the scheme and insurance and all. Then amounts not engaged in business activities or sharing intellectual property. Of course, these are there. Then gifts received. This has consequent on later amendments and all. Of course. This actually under Income Tax Act, as most of you know, are well versed with it. There are certain status of assessees which are brought to tax, like individual, HUF, companies, then AOP, BOI, trust also coming on that category only. So companies are mainly considered with respect to these PSUs, because most of them are companies only. Then LLPs are also there. These are the taxable entities which we can see. So here whatever income accrues in their hands or received is to be taxed. So as per these sections we have to go through. Then this is one important section, section 14, which says which are the heads of income. As all of you know, these are the different heads of income, like salary, then income from house property, profits and gains of business, then capital gains and income from other sources. Why we are dealing with it is since, as already I think discussed, some issues pertaining to this public sector units, especially grants in aid and all, some interest would be accrued. This interest coming under income from other sources which need to be brought to tax. So if we can go to this one, common issues, as already briefed by our additional sir. So most important thing is filing of return of income, because that is the basic document from which any proceedings under the Income Tax Act begins. Okay, so the income tax return is to be filed within the due date prescribed under the Act. Section 139(1) prescribes the due dates. Of course, there are various subsections under 139 for last returns, revised return, all that is there. That is all known to you anyway. So here. What happens as per 139(1), every person it says being a company and all that, so that's why it is put, because most of the PSUs, since we are concentrating on PSUs, they are, most of them are mostly companies, so they have to file within the due date prescribed under the Act. So then actually why this is told is, when returns are filed, certain aspects, as sir already informed you, when you expect your rights to be available to you, you are supposed to perform your duties as well. So the duties says you have to file your returns of income within the due date prescribed on the Act. Then payment of taxes also need to be made within the due date prescribed under the Act. Then certain benefits are available also under the Act, like benefit of carry forward of losses. So this carry forward of losses is available only to those assessees who are filing their return of income within the due date prescribed under the Act. If they don't file the return of income within the due date, then what happens? The loss will not be allowed to be carried forward. That always benefit will be lost to you. So when that right is, when that benefit is available to you, better to make use of it. Why I am telling you is, we have got certain incidences where these returns were filed belatedly, and during the course of scrutiny assessments, the benefit of carry forward loss and set off of loss was not allowed. So what happens in the return? The return is a loss return, means the total income will be always a loss, total loss. So there won't be any tax to be computed on that, because there can't be any positive income. So the assessee will not make any payment of taxes, be it advance tax or self-assessment tax, whatever it is. So when that is not paid, when the scrutiny has happened, that will result, when the loss to be set off is not considered, definitely it will result in demand. So when the demand is raised, what happens? There is no prepaid tax to be given credit to the assessee in that case. Then what happens? Naturally, there will be interest element involved to that. So when advance tax is not paid, what happens? Interest under section 234B and C are attracted, and since the assessee has never planned before in paying the advance tax, there will be always a burden, because liability to pay tax will be more after completion of assessment. Then what happens? Unnecessarily, for extra amount that is to be paid, the assessee has to make planning. So this puts a assessee in a difficult position. In order to avoid these things, better to check this position of carry forward of losses, then due date for filing of return, whether I have filed the return within the due date. If so, whether the carry forward position loss has been correctly mentioned. All these things need to be checked. So here we need to see these things also. For example, this issue of condonation of delay. Suppose an assessee doesn't file a return of income within the due date prescribed under section 139(1). Then what happens? Within the there is another due date, means up to 31st March, means for updated returns filing, the assessee can file return of income provided he declares additional income and pays tax thereon. That is another thing. But here also, if the due date is lapsed, then what happens? Assessee can never file a return of income for that particular assessment year. If that assessment year no return is filed, means what happens? So there are certain benefits allowable to the assessee, like benefit of carry forward of loss, or even if he wants in other cases, salary cases or even business cases, if they want to avail bank loan, the bank manager always asks for income tax return filed. So when no return is filed, no document can be produced. So what happens? There is a problem in furnishing the necessary documents required. So for these things, most of the assessees, what they will do, they will file condonation of delay. So when this condonation of delay is there, what happens? They will file the return of income belatedly, as already hinted out. There is a board circular on this condonation of delay, and as per the board circular only, this condonation can be always considered. Means to condone the delay, the assessee has to fulfill the conditions laid down by the board circular. So as per this, there should be a genuine hardship. So the genuine hardship needs to be established by the assessee only. So under any act, there is a concept of onus always. The onus is always on the assessee to prove, because he is making a claim under the act. Okay. So when he makes a claim that I have a reasonable cause for not being able to file the return of income within the due date, it is up to him to prove that he had genuine hardship. So for that he is required to produce necessary documents to substantiate that there was genuine hardship. Unless and until he is able to prove that there was genuine hardship, he will not be able to get the benefit of delay being condoned. So there are many PSUs which are filing such condonation applications. In some cases we have noticed, as sir also said, in one case some reasons were given. Like that, some reasons they will give, but they will not be able to substantiate. So in such cases, the benefit of carry forward of loss or set off of loss will never be able to be available for the assessee. This is one thing. Second thing is, in most of the cases, some of the assessees, some of the categories of assessees, mostly individuals, in some cases also companies, they will be claiming refund. So that refund can be issued only if the return is processed. Return can be processed only if it is a valid return. So that valid return is only considered if it is filed within the due date. If it is not filed, then seeking claim of refund made in the return of income, condonation applications are filed. So these things we can means the assessee can make best use of these opportunities by providing the necessary documents and explaining his reasonable cause with supporting documents in the time given before the officer who has issued the letter or giving the opportunity. So here, of course, one more thing is when such things are in confusion, or when the assessee is in a confusion or needs some help, they can always take the help of auditors or chartered accountants in that aspect, and can get the benefit for their assessees, okay, for the organization. So here also, when no return is filed in time, then actually condonation is sought. So actually this is like a vicious circle. What happens? Return is to be filed within the due date. The due date has lapsed. Now assessee cannot file the return of income. Now he seeks condonation. For condonation, application is filed, but he is unable to support his own claim that he is having genuine hardship. So that will always not help him in getting the condonation application accepted. That means, so when the delay is not condoned, he is unable to file his return of income. So when no return is filed, it can never be processed, and the refund claim made or even the benefit of loss carry forward is made in the return of income can never be available to the assessee. So in order to break this vicious circle of poverty, this vicious circle, what you are supposed to do is, you have to consider what are the various aspects with your business, and you have to see that returns are filed within the due date, and also whatever reasons you are quoting, that is always supported by proper documents which always help you in proving the claim made before the department. So then actually this, as I have already told you in that vicious circle, one more thing is, if it is not allowed, so that the benefit of set off of loss will not be there, then actually even if it is wrongly allowed under at the time of processing, or even by wrongly at the time of completion of scrutiny, then afterwards there may be some audit or some verification or revision and all that. At that time also they may observe that it is a wrong claim made by the assessee which has been allowed. So then they will say remedial action need to be taken. During that time what happens? Again the proceedings will be reopened, and then the assessee again will have to face the same situation, and then if the verification is made and found that claim made by the assessee is incorrect, then that will be disallowed. Means actually that set off of loss whatever was allowed to him will be taken back. Means there will be taxable income which was negative earlier, now becomes positive income. So again tax will be payable and demand will be raised. All these problems will have to be faced. In order to avoid these problems, it is always better to plan in a better way and see that such problems are not faced, and your return is always accepted as per the claims made by you in the return of income. So then actually here another some of the cases we have observed. So some assessees actually what happens, they will continue to show the same amount of carry forward of losses each and every year. The carry forward position is to be always verified with respect to additions made either under the scrutiny assessment or under 154, or even at the time of passing OGE or consequent to reopening the assessment or whatever it is. So if there is any addition made, naturally during that year what happens, consequent on that addition, it will be set off against the available loss which is allowable as per the claim made. Once it is set off, then what happens, the amount of loss available to be carried forward will get reduced. Then accordingly you have to rework out, and in the schedule which is there in the return of income to show or claim the benefit of carry forward of losses, you have to revise the claim and show the correct figure. If you don't do that, then again there will be wrong carry forward position. So that means it will never help you. These things need to be checked. These are the checkings to be done because it is a public sector. This amount of loss carry forward sometimes will be huge. If that huge loss is going down, then there will be probability of getting positive income and tax payment. So some of the examples for this delay in filing are also seen. So here actually we have seen some of the condemnation applications. So in one of the cases of a public sector undertaking only, PSU, Karnataka State Public Sector. So here one application was filed wherein the reasons were shown as non-appointment of statutory auditors. So that lead to non-completion of statutory audit within the due date, hence delay in filing the return of income. So here actually this need to be substantiated as to what avoided the company or whatever it is in not being able to complete the statutory audit. Statutory means actually prescribed by the Act. So when the Act prescribes you to do certain things within the framework of the law, you are supposed to do within the due date only. So if you miss the due date, then you are only responsible. Then you need to explain it. But here simply they have stated, that means what? Actually due date is given by the Act. When you don't concentrate on what is prescribed under the Act and giving importance to some other activity or something, then what happens? Naturally you will lose the importance of getting the benefit under that particular Act. Be it claim of refund or set off of loss or carry forward of loss, whatever it is. Then in another case also something like that, one more reason, in one more case we have noticed that not filing the return of income within the due date by giving importance to certain welfare activities, ignoring the importance of due date for filing the return of income, forced the assessee in filing the condemnation application. Because here of course these welfare activities are of much importance because that is the objective of any public sector or any organization for which it is set up. No doubt it is of utmost importance, but along with that you are supposed to take into consideration the other aspects by other laws, means if it is Income Tax Act or any other act, whatever duties and responsibilities are imposed by that act are to be always given utmost importance. Otherwise loss will be always to the one who doesn't obey the law. Okay. So here, as I already told you, one is genuine hardship for condemnation and delay that needs to be proved. That is one important point. Of course, proving means it is always with evidence. Since income tax is a legal provision, it is a law. The provisions are all legal provisions. You need to always prove with evidences. Of course, what is evidence and all you are all knowing. So those supporting evidences have to prove the case. Then second thing is assay to utilize opportunities in this regard, as our additional sir was telling. When you are given an opportunity, you have to make best use of it. So that means when you are asked to explain or when you are provided an opportunity to explain your case, always prove the case. So there are three ways, of course, as already told. One is, of course, except for faceless assessment, all other proceedings, most of the proceedings are still non-faceless only. You can appear before the assessing officer and explain your case whenever the case is posted for hearing. That is one thing. Second thing, if you are unable to go and approach or attend the proceedings, you can file the documents by post or through some person. That is another way. Or another way is you can always have a representative like a CA or auditor, and you can ask him to produce the documents and give evidence and explain the case before the officer who has given you the opportunity of being heard. So these are the opportunities. Then one practical example also. Of course, this gives more light on these issues because these are practically seen in the offices. So actually most of us have seen, if one person does a mistake, another person need not have to do the same mistake. He can learn from another's mistake. So these are all like that only, because we have seen here they are doing these kinds of mistakes. If you see this example, So there was a public sector undertaking filing a return of income. It was taken up for scrutiny. So during the course of scrutiny assessment, it was noticed that from the income computation, the assessee has made a claim actually of loss to the extent of this 11 crore 1102 44 4437 as set off against brought forward depreciation for assessment year. Of course, this is old one for 17-18. The assessee was asked to produce the working of unabsorbed depreciation. The letters were given. Then what has happened? You see, this is the working actually. If you see the working, you can make out what is the reality, because this is a practical case. So just to explain the case means what is the effect of not being able to verify your own details. What will happen during the course of assessment proceeding? Just presenting this case. If you see this, right from 2009-10 assessment year, unabsorbed depreciations are available to the assessee. Those are all losses only, depreciation means. So once you are considering all that, the total amount of depreciation available to you was coming to 1506 1975 378. Out of that, of course, assessee has to deduct the profit for the assessment year 2015-16, which was 55 27 35 726. If that is done, and for assessment year 16-17 profit is also deducted. So this is what I was telling when I was referring to this income tax return columns, where you are supposed to mention the position of carry forward of depreciation loss as well as business loss. So these columns have to be computed this way. If you suppose in this case, you see the profit for assessment year 16-17 is not considered, what will happen? So to the extent of this 494 and all, that will be on a higher side, because that is never allowable. Here also the same thing, you see. Profit for that, if it is deducted, then the total unabsorbed depreciation loss worked out to 956.56, 94, 721. But how much assessee had claimed? 11 and all. So you see the result of it now. So as per the working provided by the assessee, now what is happening is, in this case, during the assessment proceedings, on verification of the assessment records available, it was noticed that the amount of loss available is only to the extent of 956, 56, 94, 721, but the assessee had made a claim to the extent of 1102, 44, 437. So there is a difference of 145, 87, 45, 760. Okay. So that means to the extent of 145 crore, there is an excess claim of loss made in this case by the assessee, which needs to be disallowed, because that is the excess loss claimed without any proper working, because that is not supported by any document, whereas this working for 956 crore has got a document, because that is supported by the amount of loss carried forward and allowed each year, and deducted means set off against the profit for these years. So once you are doing this, what happens? The correct amount of loss needs to be always considered and worked out actually. Once this is done, always you will be on the right side. If you are right as per law, nobody can always question you, and you, whatever claim you are making in the return will be always allowed. In this case, what has happened? Since it was not supported by the documentary evidences, this 145 crore, whatever was excess claim in the return of income, was to be added. That's how the assessment was computed. Okay, right, thank you. So we will all meet after the break. Kindly join us. Okay, 15 minutes break, as I have been informed. We will continue. Thank you. So all of us have to be this one. Please, this is an important session. So actually, I am thankful to the CA organization, and especially our your chairman Shri Manjunath sir, for having accepted our request to conduct this program within a very short span of time, and other senior CAs who are actually known to me for so many years also helped in conducting this. I am thankful to them. Anyway, public sector from public sector units also many have come. I am happy that they have all come in response to this invitation to attend this program. So this is meant for them only. So if their problems and other things are being discussed, we will continue with this. So so far we were mainly discussing on benefit of carry forward of business loss. So there is another most important thing with respect to this PSUs or any company for that matter, or any assessee carrying on business. So any assessee getting income under the head business or profession will always have the benefit of depreciation. So this depreciation is defined under section 32 of the Act. So you can just see it is in respect of buildings, machinery, all these things which are tangible assets, or know-how, patents, all these are also there, which are for which this depreciation is allowable. These are all intangible assets. So this actually, of course, as per the Act, there are certain conditions prescribed, like that assets should need to be owned by the assessee or wholly or partly and used for mainly the business or profession carried out by it, from which it is earning the income. So then only the depreciation can be claimed. So in the case of assets of an undertaking engaged in generation and distribution of power, and distribution of power, such percentage of actual cost and all. So this may be prescribed, all these things are there. And in respect of this, there is one more concept actually, actual cost. So that actual cost is always required to be worked out for the purpose of working out depreciation allowable for that particular year. So in the hands of the particular assessee. So here actual cost means, so there are certain issues here, means whatever amounts, means even in this grants in aid and other things, when they are used for these things, that needs to be reduced from the cost of the asset, then only depreciation is to be worked out. So in the case of any block of assets, of course this is a concept under the Income Tax Act, such percentage of written down value and all prescribed, based on that only it needs to be worked out. So here most important thing is wrong claim of depreciation. See, this wrong claim of depreciation in the hands of the assessee cannot be allowed, because one is they already have discussed two conditions. One is the asset should be put to use by the assessee and it should be owned by the assessee and it should be used for the business of the assessee. That is one thing. Second thing, here this whatever depreciation is claimed, there are of course various class of assets for which particular percentage of depreciation is prescribed under the Act. So to make a claim for the particular rate of depreciation, that particular asset need to be classified in that class of asset only. Then only that percentage of depreciation is allowable. For example, plant or machinery, all these things, buildings, all these are different class of assets. For that you need to prove that falls within that category of asset only. So if there are certain incidences noticed by the department wherein the assessees claim higher rate of depreciation, which are always allowable as per the Act, but in the assessee's one case, the asset will be different, for which no such higher amount of depreciation is allowable. On such in such situations, what happens is either at the time of scrutiny or verification or inquiry or survey or search, or even after completion of assessments during the course of audit. So if verifications are made and noticed that this is a case wherein the assessee has claimed excessive depreciation, wherein that percentage of depreciation claimed is not allowable, so then that proceedings need to be started afresh to actually disallow the excessive depreciation claimed by the assessee. So this again leads to litigation. So when this litigation is there, assessee will always have the problem of demand in his hands created consequent to such kinds of issues. So then reassessment may happen, or rectification may happen, or 263 may happen. Then what happens? In the place of original demand, there will be another increased demand consequent on these reassessment proceedings. Or there may be a case wherein the assessee had earlier got refund and which get converted into a demand now. So consequent on this demand, what happens? There are so many instances of assessees, including public sector units, wherein the demand is created for a particular assessment year and the demand will be booked in the hands of them. So that will be reflected in the system. So the demand is always considered by the CPC before refund is issued. Suppose there is any demand payable by the assessee which has already been determined, and which is classified as a collectible demand by the assessing officer, then what happens? The CPC will definitely adjust that demand towards the refund payable, maybe for the current year or previous year for which any proceeding has been recently concluded under either 154 or OGE or even scrutiny assessment or whatever it is. So then the assessee will have a grievance stating that his refund has been reduced and he is not getting the refund as per his calculation. This is always happening, and they come up with new grievances stating that rectification needs to be attended or some revised OG needs to be given and all that. So this again what happens? As per the assessee, refund claim will be different, but whatever they are getting is also different. So this can be avoided if they correctly verify these details. These are all the precautions that may be taken at the time of any proceedings, be it under 147 or under 154, 263, whatever it is. So then there are other issues also. This issue is also being observed in so many cases with respect to so many assets, including public sectors. Of course, this TDS credit is always an issue. So with respect to TDS, there are 2-3 things. One is actually the TDS credit as claimed by the assessee in the return of income. That is one amount, and the other amount is TDS reflected in the 26 AS. That is another TDS amount. Then another one is TDS allowed by the system. So that is another one. So here, if the TDS claim made by the assessee in his return of income or in its return of income is tallying with the TDS credit available as per 26 AS, then the TDS credit can be given by the assessing officer either under 154 or under OGE or under scrutiny, whatever it is. So if the amounts are not tallying, what happens? The TDS credit will be restricted as per the TDS available as per 26 AS or as per the claim made, whichever is lesser. So here again the assessee will come up before the assessing officer requesting for rectification or again passing a revised OGE or something like that. So these things can be avoided if the assessee verifies the TDS availability as per 26 AS in his case, and then if it is tallying with his claim, then it is okay. Otherwise, he has to verify and make a claim accordingly. If that care is not taken, then again these proceedings will result in creation of either demand or reduction of refund. So here this form 26 is, of course, many of you are aware about it. It's an annual statement provided by the Income Tax Department. So here this is with respect to PAN of the assessee. Okay. So with respect to that PAN, whatever transaction has happened during the previous year relevant to that particular assessment year, all that will be reflected in the 26 AS. So on account of such transactions, whatever payments have been received or made, so TDS whatever has been made with respect to that PAN will get reflected in the 26 AS. So these credits, TDS credits, whatever are reflected in 26 AS can always be claimed by the assessee. This is the basis of claiming TDS by the assessee. So here these are transactions linked to the PAN. Then of course, as already told, this is an important document, as important as ITR. So here this credit tax credit verification is always made with respect to 26 AS. So if it allows to verify the tax deducted or collected, because even TCS is also reflected in 26 AS. So these are the amounts which are deposited with the government and are correctly reflected with the particular PAN. If the PAN is wrongly quoted, there are certain incidences where they come up for revision of these claims. Then we will have to ask the TDS officers to revise the TDS credit availability by making suitable corrections. Means the deductor might have done a mistake in his end, due to which the deductee will not be able to get the credit for that particular amount of TDS or TCS as the case may be. So here also it is all with respect to PAN only. So here actually the question of accuracy of filing ITR by the assessee is always relevant because the claim made in the ITR is always cross-verified with respect to the claim of TDS or TCS available as per 26 AS. So here what are the advantages? Why we have to see 26 AS is, so this prevents the assessee from getting notices. Means there may be notices under 154 or whatever it is, even at the time of scrutiny also they may take up these issues and they may say that this particular credit is not available, or another possibility is also there. Suppose TDS credit is available to the assessee as per 26 AS. TDS credit correctly made in the return of income as reflected in the 26 AS. But in some cases what happens, even though the TDS credit is made, claim for TDS credit is made by the assessee in the return of income, but the corresponding income is not offered to tax by computing that in the taxable income declared in the return of income. This is one aspect where it calls for reopening of assessments on many occasions. Even one under different proceedings at 263 also, this may become an issue. So it is better to take precautions to avoid such situations where this mismatch of TDS as per 26 AS and as per ITR is, if it can be avoided, it is always better. You always please file the return of income considering the credit available and also computing the income whatever is corresponding to that particular TDS or TCS available as per the 26 AS in your case for that particular year, particular assessment year. Okay. So then proof of tax payment, this is another important one. So here actually apart from TDS, some challans are also there where like advance tax or this self-assessment tax, wherever claim is made, that claim also should be reflected in the 26 AS, because whatever tax payment is made by the assessee, including public sector, that gets reflected in 26 AS. In so many cases, we have observed that tax payment is made with respect to some PAN, but credit is being asked to be given with respect to some other PAN, which is not possible. We have seen such examples of rectification applications and other applications filed by the assessee. Even if it is not attended, it will result in grievance petitions filed under E-Nivaran or even CP grams. So they are asking for extra credit sometimes, or credit with respect to a particular PAN. So that particular PAN is not reflected in the 26 AS of this particular assessee, in whose case this PAN does not relate to him, or with respect to that particular status. Suppose it is a case of HUF and individual, or company director, or firm and partner. Suppose the case of in the case of a firm, the TDS is affected, but the partner is making a claim of the TDS. It is not correct, because TDS need to be claimed in hands of the person in whose hands the TDS is deducted, as reflected in the 26 AS. This is one of the most important aspects to be considered, because some persons are filing some wrong claims. Because of that, it results in a lot of proceedings getting reopened, like 154 or even 147 and all that. Better to avoid this, and better you check these aspects before you make a claim before the department. Then another one is actually wrong quoting of major and minor heads of challans. This is a frequently appearing problem in our department. Many of the assessees, including PSUs, they keep on asking, I have already paid the tax, but still I am getting the demand. In CPC portal, it is appearing. In my return actually nothing is there, no demand is there. Even in my this one, but however in my intimation, 143 intimation, or even in my say 143 order or 154 order, this is not getting reflected. They will say particular challan is not appearing because the head of challan, major head or minor head, is wrongly mentioned. Some of the persons pay actually advance tax, but while filling the challan, that head needs to be mentioned correctly. Instead of mentioning it as advance tax, they will mention the head of self-assessment tax. What happens as a result of it? These amounts are getting reflected in the case of the assessee with respect to the PAN, but in a different year. That is also there, because advance tax is before 31st March, and whatever is paid after 31st March will not be accounted by the system as advance tax. So there is no question of getting reflected that amount in the case of that particular assessee, then assessee will have naturally grievance. He files such CP gram and other things and asks for resolution. But it is very difficult to resolve because here the system will not allow that particular credit because that credit is available with respect to that particular head that needs to be changed. For that proof is also required because without any proof we cannot do that. For that payment as verified in the bank's statements and other things we need to verify, then only we can change that minor or major head. Then only that rectification can be done so that the assessee gets the credit of tax whatever is claimed in that challan. So this is one of the most important aspect. I have got a list actually with me in which there are so many assessees with us who are actually paying self-assessment tax in place of advance tax because as per the Income Tax Act, of course starting from 208 to 211 and all that, those sections are all discussing the importance of paying advance tax. Here any assessee having this income, so we will discuss all these things. That's why I have made this as a part of this PPT. Instead of paying advance tax, they are paying self-assessment tax. And public sector units also we have observed huge self-assessment tax paid in place of advance tax. So they are supposed to pay advance tax, but they are not paying. So this actually has got twofold effect. One is, see, when advance tax is paid, there is no need of paying or computing interest under section 234B and C of the Act. That is the advantage for the assessee. Okay. The other advantage for the department is the amount of tax paid by way of advance tax is always available to the assessee in hand, beforehand. So before the completion of that particular year. But whereas if the same is paid after 31st March in the form of self-assessment tax, then that is available to the government after that particular period. Means the period for which it should have been paid, the interest on that is always, the benefit of that is always availed by the assessee. Whatever money should have been with the government, that is lying with the assessee. That's why interest is charged under 234B and C. That is the logic. Then second thing is, of course, he will not be getting interest because that advance tax also will come in that way. These things can be avoided. That's why this we will quickly go through this important section of advance tax provisions under the Act. So 207, you can just go through here. So important in the light of this PSUs, I have already told you what are the important points. So here instead of paying the self-assessment tax, we can always compute your income, estimate, make a proper estimate of total income and then taxable income, and based on that how much is the tax liability you have to work out and pay the advance tax in the installment as per Act. So then if we go to next slide, it says what 209 of the Act says. Here also this says, so the amount of advance tax payable in the financial year subject to the provisions of all these things, computed, how it is to be computed and all that, that is discussed here. Then if we see this also, where calculation is made by the assessee. Here one more important thing, most of the assessees, since long back I have been observing this. So many people are under the impression that demand notice under section 156 can be issued only under certain proceedings like 154 or after passing OGE or after passing this scrutiny assessment either under 143.3 or 147 and all that. It is not so. It can be even issued in cases where the assessee is found to be a defaulter as per the provisions of advance tax provisions. That is there in the Act. But so many people argue when we send them such notices to them, asking them to make the payment. This has happened earlier, so that's why I am just to remind about these consequences of not paying advance taxes. When the assessee fails to estimate the advance tax, means tax liability and pay the advance tax on that, the job will be taken over by the assessing officer, and for the purpose of making the estimate of advance tax, an order will be passed under section 210(3) of the Act, and total income as per that will be computed, and whatever tax is to be payable, that will be considered for making payment of advance tax in the hands of the assessee. So here 210(4) of the Act also, that will show the calculation, and accordingly the taxes to be paid in installments will have to be made. Here the payments, how it has to be done, that we will see. So here if you see 210 section is also relevant here. You can just see this section also. Here how to pay and when to pay is also specified. So advance tax in each installment, it needs to be paid accordingly. If the estimate is made as per which there is reduction or increase in particular amount of tax in a particular installment, that needs to be reworked out and paid. So if you see this one again, so here what is the time and all given. So before the means as soon as the financial year begins, it is the duty of the every assessee to always estimate the correct amount of income, means taxable liability is to be worked out, and accordingly advance tax needs to be paid. And for these purposes, of course, the provisions may be considered accordingly. Here we will see this. So as I have already told you, under section this 210(3) and this one 4, this amounts will be made known to the assessee by way of that order passed, and he is supposed to make the payment. Otherwise, he will be treated as defaulter as per the Act. So if you see these things, advance tax, how much is to be paid and all. So this is the chart which usually everybody knows, and usually they go to their CS or auditors for estimation and payment of that particular amount in that particular installment. And of course each time they will be asked why there is shortfall and all, and sometimes there will be analysis of why there is lesser advance tax paid compared to last year, or when more advance tax is paid, they will see why I am paying more advance tax. Some of the assessors will analyze that also. These are important aspects. These are all financial aspects which are always analyzed for the benefit of the business of the assessee. So according to this, we have to make payments. So as all of you know, this 15th June, 15th September, 15th December, and last installment is 15th March. By 15th March, full payment needs to be made. If there is any shortfall in any of the installments, interest under section 234C is attracted. If there is any shortfall overall in the year, 234B is also attracted. Better to avoid this interest, because that will be a burden on you, because that is calculated at a higher rate. So it is since it is a burden which is more than interest under section 244A, so it is better to avoid, being a prudent businessman. Okay. So then if you there are so here this why I have to pay advance tax, some persons may be having this doubt, because see one thing is earlier the provision was not there. Afterwards due to amendment and all in the Act, they made it that whenever return of income is to be filed or uploaded in the e-filing portal now, so the tax liability worked out by the assessee needs to be paid. Means there should be nil balance. Means there should not be any tax payable. If it is to be payable, it should be paid under section 140A, self-assessment. Without making that payment, you are not supposed to file your return of income. That you need to note down. Okay. So if it is done, it attracts prosecution also. I needed to tell, of course, as you all know it. But since this is one of the important aspects which is observed, including public sectors, I took it up. Otherwise, it is a known thing, because your CSR auditors usually will be advising you to pay correct amount of advance tax. So then and other aspects are also there. That's why we are having this session now. So as we have already discussed, those were some of the issues. And in the case of some of the public sectors, usually these public sectors, Usually in the case of these public sectors, what happens is, these public sectors are actually working on behalf of the government, means whatever is relevant to the public only, that public work is also taken up by these public sectors. So in some cases this developmental activities of the government, like construction of road, bridges, etc. are also taken up. So when such construction activities are taken, what is happening is, there will be an issue of working out the cost of particular asset. Means in the balance sheet there will be assets on the right hand side of the balance sheet, in which we are supposed to show work in progress, work completed and work initiated order. So in that what happens now? So the balance sheet shows different figures, but in reality, if you go and verify, the amount of work that is completed will be different. So there will be mismatch between the amount invested in the construction work and the amount actually shown in the balance sheet. Then there will be always an amount of doubt in the minds of anybody when such verifications are made and found to be not matching. Then action will be taken either under survey or even search or even scrutiny or whatever it is. So then this results in what? Addition to be made at the time of assessment. Then this actually creates a demand in the hands of the assessee for that particular assessment year. Then instead of getting refund, which is a claim made in the return, the assessee will have a demand. This is one of the aspects which can be avoided. This is one important aspect. So care need to be taken to see that whatever figures are shown in the financial statements, like a P&L account, balance sheet, are always matching with real figures. Okay. Then there are some other mistakes which are noticed in the case of public sectors. So here what happens is, any business person or professional carrying even professions will be maintaining books of accounts. So those books of accounts, there are certain primary documents maintained by all the assessees. These primary accounts, primary books, documents are produced even for audit. So even after completion of audit also, it is seen that in some of the cases, these figures, whatever is shown, is not matching with the real one actually. That is what is happening. So you need to show the correct figures. And in some of the cases, it is seen, including PSUs, that the details of these expenses and payments which are maintained. So these public sectors are also having certain projects and all, like building a road or building whatever it is, buildings or something. So in those actually what happens, the PSUs will be actually making these expenses, incurring these expenses. These are actually shown project wise or unit wise by the PSUs. But when the verifications are made and the PSUs or any assessee is asked to furnish details with respect to individuals to whom payments are made, then there won't be any matching. Means whatever is payment is made individual wise, if it is totaled up, as per project it is not tallying. So that means what? Under cross verification, that is failing. The test of cross verification is failing. So this should not happen. There should be sufficient care to see that whatever details are shown individual wise also tallies with unit wise or project wise. This care need to be taken. This will always help you to avoid any additions or any levy of penalty and all that. This will even help you, even if any survey or such proceedings happen, then also it is always helpful to avoid such situations. So this is just a brief this one. Of course it is not common with all the assessees, only in few cases it is seen, that's why it is covered. So then there are some other issues like this financial the statements like P&L account, balance sheet, audit report are all actually they are supposed to be supported with the books of account listed under this act and also under the accountancy like ledger, debit, etc. But in some of the cases, this whenever ledger account and other details are asked, some of them fail to produce them actually. Then what happens? It is considered that the figures shown in the financial statements are not support with supporting documents, means it is not substantiated. Then again it becomes a case of actually showing wrong or incorrect figures. So this can be avoided. Then actually there is one more issue, this is regularly seen. So TDS provisions, of course, this is being handled even by TDS section of the people also in our department. So wherever TDS need to be attended, tax need to be deducted or at source, that needs to be deducted under that particular head at that particular rate. So where there is a little, if there is any shortfall in TDS, then what happens? You need to pay interest under 201. This can be avoided. Then one more is, even in case of some PSUs, TDS variation, it also can be set right. If there is any variation, no proper reconciliation is filed, it will always call for addition. Please avoid it, always reconcile before taking such amounts. And this one more aspect is, most of these PSUs, since they are companies, so under the Income Tax Act, there is a concept of this book profit, it needs to be computed. So when this book profit verification is made, they are unable to recompute it. So when the appellate authorities also ask the assessing officer to recompute the book profit, then this need to be correctly worked out. Otherwise, MAT credit cannot be given as claimed by the assessee. This need to be done. Of course, for this, the help of CAR, auditors can be avoided. In some cases, if this is done, then litigation can be avoided. And another mistakes are there, of course. Here, some of the assessees actually interest expenses are debited. That's why I was telling the heads of income. Here in the this actually interest whatever is earned will not be shown in the P&L account as income, but only in the balance sheet it is shown as the deposit made or the amount of investment made. So here, since this is not accounted, what happens are that will call for addition. Otherwise, some of the payments which are to be made under 43B within the due date, if it is not made, again it calls for addition. So this again in ITR CPC, that issue is there, we have already told this. Then one more thing is grants in aid. This is one of the most important aspect, as I was also telling. See, this grants in aid is particularly, it is a lot more discussed issue, we can say. So here grants are given to a particular entity like public sector or anybody for a particular purpose under a particular project. It is for the benefit of certain beneficiaries marked for that under that project. Here what happens, that amount received by the government is not spent for that project under that head only, but it is neither sent back to that government or state government, nor it is this one shown as this one means spent for that. So then what happens, that will be deposited under FD or something, and interest is earned on that. That interest earned, if it is actually paid to this state government back or something, then it's okay. Or approval is obtained, then it is okay. But there are certain instances where these approvals are not obtained, and also this interest accrued on such deposits are also not accounted. Then additions are made. Here is an interesting case which I will show you quickly. So there was a case of an assessee where a grants in aid was obtained. So this amount, whatever you can see, 596 crore, which is a huge amount, which includes interest on FD. So all this was there actually. So then actually he was given opportunity of being heard and all. Then what happened, after due verification in this case, interest accrued on that was computed and all that. So it was seen that it was no permission was obtained from the state government to keep that deposit and all. Then what has happened actually? This amount was brought to tax. Of course, there are various issues which, since time is not there, I will not be able to tell much about this granting aid, because this is a much discussed issue. It will take long time also. So, if any of the doubts are there, you can ask. Anyway, I had a nice opportunity to talk to you all. Anyway, thanks a lot for being patient hearing with us. Thank you all. Okay, thanks. So now other officers are also speaking. Thank you.
Thank you for your patient hearing. Now I'll invite Shri Dhiman Sinha ITO to deliver his thoughts on the issues faced in faceless assessment and and what are the common mistakes that are found in faceless assessment. How an assessee can avoid the mistakes.
Good evening everyone. Myself Dhiman, Narayan, Sinha, presently working as Income Tax Officer in BMTC Billing. I extend a warm welcome to everyone present here. I am delighted to be here to talk to you about faceless assessment, remand proceedings and taxpayer services, etc. The first topics I would like to touch upon is common mistakes by assessees in faceless assessment proceedings. I worked as faceless officer for 3 years and noticed the following shortfalls. The faceless assessment scheme was introduced to promote transparency, efficiency and impartiality in income tax assessments. However, many assessees still face difficulties due to procedural and documentation related errors. The common mistakes include 1. Not responding within the specified time. Many assessees miss deadlines for submitting replies, evidence or explanation on the e-filing portal. Even extension availed under the portal are sometimes not requested. So there is an option to ask for an extension of time. A separate button is there. So that is not being exercised by many of the assessments. Delayed response often lead to adverse ex parte assessments. So another issue is that submitting incomplete or poor quality documentation. That is, the documents which has been submitted are not legible. Uploading unclear, unsigned or mismatched documents. Something is asked for and something else is uploaded. Not providing the specific evidence asked for by the assessing unit. So assessing units nowadays it's a faceless, so they will be giving you a questionnaire with a lot of details they will be asking. So you have to give them details in a very meticulous manner. Submitting the bulk document without proper labeling is also been seen. So many a times it is seen that huge number of documents have been uploaded, but it is not been labeled or it is not being indexed. So it is not possible for the assessing officer to suo motu find out the requisite document out of the whole document. Next is not reconciling data with Form 26As, AIS and TIS and GST returns. So difference between the reported income and the information in 26As, AIS, GST frequently triggers additions. So, and another thing is that not providing a point-wise and structured reply. It is seen that the assessee provide general explanations instead of addressing each query specifically. So there is a specific question, you have to answer the questions in a specific manner. Now in this era, the submission should be made meticulously on the issues questionnaires issued by the department. So earlier what happens, it is often talked about speaking orders to be passed by the department related to the assessment orders, penalty orders, etc. But the days have now come where submissions should be made to the faceless manner, also to be a speaking submission. So your submission should be speaking, which is lacking. It is because of the poor drafting. I am sorry to say that drafting is what is being submitted to the faceless replies are not proper. It is not to the point, it is not specific, it is what is being asked that is not given. It is very general type of replies given. With that, you cannot expect a proper assessment result or proper assessment order. Your drafting should be improved, because that is the want that is required nowadays. Your drafting should be improved to such an extent that what you are earlier speaking and conveying to the assessee, to the assessing officer in person, now it has to be conveyed in writing. So it is much more difficult actually. So until and unless your drafting is very fine and very particular, you will be unable to communicate what you want to say. So it is always to explain a complex issue to the counterpart only in black and white mode. Many a times, due to poor drafting of explanation given by the assessee on any issue, the faceless officer fails to understand it properly and eventually lead to additions. Fifth issue is ignoring notices due to email SMS issues. Notices go to registered email or mobile numbers that are outdated. So the mobile numbers which are years together with the same data, same email ID, same numbers, because that nowadays it is auto-populated while filing the return. So the same mobile number and email ID will auto-populate while you file the return, and you file the return with that same number, which is no more working. With numbers are no more working, the email IDs are no more active, but still that is being used for filing the return of income, and that is what the department has. So all the notices are going to that, those communication only. Failure to update the contact details resulted in missed communication. So you are missing the communication. So you are missing the communication how a department is sending, and it isn't delivered also. Because that email ID you may not be using anymore, but it is still receiving. The email ID is later notices are going, and it is a valid service of notice or service of letter in the eyes of the law. So it is going, you are not responding, and eventually it is leading to ex parte orders and then additions, and later on into litigations. Technical errors on portals. It is seen that many cases documents were uploaded in the wrong file format. So there is a specific file format it is written, and there is a size also. You cannot extend to that beyond that size. Or you are using, I have seen many, in my case I have seen many documents they are uploading with a password protection. So yes, I have received. When I was faceless, working with faceless, because I don't know where from it is coming. Faceless we do not know, who is, maybe some Gujarat, somewhere, from any part of the India it is coming. And when I am opening it, it is asking for password. So I cannot open it. How can I open? If I cannot open it, I cannot read it. And I have communicated this also. Next notice. See, whatever you have sent, it is password protected. I cannot open it. But still, they are again uploading the same document. Again, password protected. So eventually, I could not read the document, and it ended up with addition because I could not see the submission, right? So how can I understand what the SSC wants to convey? So please, before uploading the document, please see it is not password protected, because sometimes it is kept in your computer as a password protected for the safety or for the security purpose. But you forget when you upload, you forget to unprotect it, and it gets transmitted. So please look into this issue. Not reviewing draft assessment orders sent as show cause notice. When everything is over, when nothing is given, nothing is all 4-5 opportunities given, nothing. So before the additions were made, the last show cause notice is given to the SSC. This is the time you must understand that when show cause notice you have received, please take it seriously, because show cause notice, if it gives for 5 days, means the other side, JAO is waiting to end the 5 days. The 6th day he will pass the order. Why? Because he has got lot of work pressure. It's not that he is enjoying the addition, but he has got time barring date. He has to pass it. He has got many assessment orders in hand by that time, because it's a faceless no. So lot of problems. We are not getting the replies. All cases are dragging. Apple are going to the fag end. So at the fag end, when the show cause notice is issued, then there is a mounting pressure on the assessing officer to complete the assessments, and we have in a time-bound manner. So we are just waiting. We are sending 5 days, means we are waiting for 5 days to complete. 5th day complete, 6th day morning it will be passed. Okay. So please see, show cause notice comes means you are in the, now a red flag is there. So now you have to act upon quickly and answer to show cause notice. If not, please ask for time. Ask for time if the time barring date is not nearby. Okay, you can still ask for time. 4 days, 5 days, you ask, and then you submit the reply. But do not ignore it. Okay, 5 days are there, 1 or 2 days I can manage. No managing. 5th, 6th day, it will be blocked. Reply will be blocked. You cannot reply. Even if you want to reply, you cannot reply, because reply will be blocked. No, other side is waiting. We are waiting there. 5th day to be clocked, and 6th day we will be blocking. Because we want to complete that case. We have given enough opportunity and you have not availed. So now we want to complete it. So please seek it.
Just to interrupt you once again. The problem doesn't end there.
You have to on it. Sorry? You have to on it.
Yes. The problem doesn't end there. supposing somebody, as is rightly pointed out, that you are unable to upload your reply because the access gets blocked. Now it may so happen that you do not get opportunity to file your submission, and then the assessment order gets passed, making that addition. You have an option of filing appeal before the Commissioner appeals. Or if you feel that you can directly go to a High Court and get the assessment order set aside because you feel that you are deprived of adequate opportunity. It is a vicious cycle which starts again from zero, ground zero. What if in the second round again you commit the same mistake? So the point being, mistakes should be avoided in faceless, because faceless has been devised for the benefit of the taxpayers, right? So if it has been devised for the benefit of the taxpayer, it is also expected that replies have to be furnished within a specific time frame. And if it is not furnished, then the system automatically blocks it. The software access automatically blocks it. You may have a very good case. You have a very good case on merits, you may have an arguable case, but it is of no use till the submission is filed. So therefore, I am not discouraging the taxpayer or anybody, but my point is, even if writ petitions have to be filed, they have to be filed with extreme caution. That's my point.
So the conclusion is success in faceless assessment proceedings depend on timely, accurate and well-structured response supported by clear evidence. Assessee must maintain updated records, reconcile financial data and respond promptly to avoid unnecessary additions or penalties. Well, next I would like to throw some light on the issue of this remand proceedings. So another important opportunity is in the form of remand proceedings. Remand proceedings refer to the process where a higher authority, usually the Commissioner of Income Tax Appeals, ITAT, sends a matter back to the assessing officer for fresh examination, verification or reconsideration. Remand proceedings help maintain natural justice, and especially when the assessee did not get adequate opportunity before the AO, relevant evidence was not properly considered earlier, or additional evidence is produced at the appellate stage. Remand gives the assessee an opportunity to prove authenticity and correctness of such evidence placed before the appellate authority to reach a conclusion, preventing unnecessary additions and litigations. So remand proceedings is a fantastic mechanism where you have still time, opportunity to come and represent yourself, your case, and your case can come to a logical conclusion. Preventing when additional evidence is accepted or factual contradictions are clarified during remand, several additions get deleted at the CIT appeals or ITT level. Litigations at higher level, High Court or Supreme Court is reduced, so there is no need to go for writ and all those things. We can just stop the proceedings there itself. So I have seen, right now also I am having 10 remand proceedings. At present I am doing, because I am in Java, so I am having 10. Out of that I have sent letters to all the 10. Two times, 3 times I have sent. Out of 10, maybe 3 or 4 persons have asked for time. They have also not come. They have sent 2 letters asking for time, give us time. Rest 60%, they have not responded till now. Out of 10, 6 they have not responded. It is in the remand proceedings, though they are not interested. Lastly I called over 4 because I have a pressure to submit the remand report. CID appeals is sending me the reminders, please send. My CID, my jurisdictional CID is telling why you are not submitting the remand report. So I called them. So when I called, the SEC picks up and they told, no, I am not aware of remand report. What is remand? See, this is what happening. See, he's telling he doesn't know what is remand. Then I told, okay, you talk to your CA and ask and bring him to me. I will explain what is that. He told, okay, sir. But that also 15 days, 1 month passed. Nobody came. Nobody submitted anything. Now think, this is the ground reality. The ground reality is very pathetic. Means even in the remand proceedings, when the assessee is getting the opportunity to explain in person Earlier they used to say, no, faceless, we do not know how to represent, we are not tech savvy and all those things, and in black and white, which is very difficult to explain. Fine. Now you get the opportunity, no, to come in person and explain. Why can't you? You are not coming. But still, people are not coming. Then what to do? I have to say again, send a remand report with what? With a negative remark that nothing could be explained, and addition will sustain. So this is what happening actually in the ground. This is happening. In fact, it is the only forum where the FSC can seek personal hearing before the job to explain the issue, justify the supporting documents in person. So this is a extended assessment actually. Remand proceedings, you can say it is an extension of the assessment. The assessment you could not explain in person, that is your grievance, but in the remand proceedings it is an extension. Now it is extended. You come now. Now you can think of the faceless has now converted into a non-faceless. You can think of it like that. Now you can come, you can explain, give the documents and supporting documents and settle the issue there itself. But you are not coming. Still you are not coming, and the additions which is being made will remain. So the SSC must take this opportunity seriously, which would lead to more accurate and equitable tax outcomes. The third point which I am touching upon is taxpayer services and duties of SSCs. Modern day tax administration emphasize not only revenue collection but also taxpayer convenience, transparency and voluntary compliance. The Income Tax Department provides various taxpayer services while SSCs are expected to fulfill certain duties to ensure smooth interaction with the tax system. Taxpayer services refer to facilities, assistance and support made available by the Income Tax Department to help taxpayer file return, pay tax, resolve issues and understand their obligations. Key services include online services on the e-filing portal, viewing Form 26As, AIS, TIS, etc. The department has developed AIS module in the portal for all the SSCs so that all significant transactions made by the SSC which has tax implication be readily available to the SSC before filing the return. One should invariably verify the correctness of the information and incorporate it in their financials. In fact, AIS has made the life easy for both the SSC and the department, because earlier we miss out a lot of things, even means unintentionally also we missed out a lot of things. But now AIS everything is there, and it is evolving every day. Every day it is evolving, because now this artificial intelligence is also is bringing to for the AIS. So the data will be more refined. Earlier there is a duplicacy of the information in the AIS. You can see that in the present day AIS, that duplicate of the information has been reduced, and it is almost, I think last year there is no duplicate. All wherever the duplicate information is there is no more duplicate information in the AIS. So it is evolving day by day. Pre-filled data for easier compliance. As you know, nowadays a more accurate pre-filled return populated with the income details are made available for certain tax returns. This has made the compliance for the SSC more simple and less time consuming. Then another is online grievance redressal or e-Nivaran. SSC can file e-Nivaran grievances through their e-filing account, and the system will automatically assign the grievance to the concerned authority. The department tries its best to resolve the issue in time-bound manner and responds to the SSC by closure note of the grievance. So it is a time-bound, we have to close it, and definitely you will get a reply to it. If the matter is not resolvable, then a letter will go to you asking for certain details to examine and then to resolve the issue. Taxpayer Facilitation Center, Aykar Seva Kendras provides a in-person assistance. In all the offices of Income Tax Department, ask centers were made available to assist in guiding the SSC to resolve the issue. So next time, when you are confused whom to approach for knowing concerned authority, particulars of forms or applicability of any taxing section, please proceed to ask for a generous help by the department. faceless schemes and digital services. In fact, faceless assessment appeals penalty proceedings are nothing but taxpayer services to improve transparency and reduce human interface discretions for uniformity and fair treatment to the assessee. Dedicated helplines and email support is provided to the assessee to interact with CPC and tax authorities to resolve tax matters, which is available in public domain, such as e-filing portal under Contact Us, etc. Refund and processing services. Nowadays, a considerable number of returns having no mismatch of data are getting processed within 7 days of filing the return. This has resulted in speedy issue of refund to the taxpayer. In case of discrepancy of data in ITR and database of the department, prompt correspondences are made by CPC to the taxpayer for necessary correction in ITR. Taxpayer education and awareness department is also conducting periodical workshops, webinars, public awareness campaign to make the tax compliance easier and error-free. In the designated portals, circular guidelines and IT Act rules forms are made available as soon as it is published. Interactive tools like tax calculators are made available in the e-filing portal so that assessee can compute the tax liability very in advance to know the advanced tax liability, etc. This calculator also provides comparative tax implication under old tax scheme and new tax scheme, so that taxpayer can choose the suitable scheme. So their comparative analysis is there actually. At the end, it is the statutory and moral responsibility of the assessee to ensure proper tax compliance and smooth functioning of the tax system, which includes filing accurate and timely return, pay advance tax, self-employment tax, TDS, TCS obligations on time, maintain proper book as required under section 44AA, preserve records for the prescribed period for audit or inquiry, ensure claim under like 80C, 80GGC, 80G, 1013A, etc. genuine, because nowadays you may be knowing that so many cases are reopened based on the bogus claim of 80GGC and everything. This is a pilot project taken this year, and thousands of cases have been selected, and many has ended up with a huge demand. Actually, last week itself, SSC came to me. He is having a tax demand of 6 lakh odd, and he has claimed a bogus deduction of chapter 6A and house property. And he came to me. Actually, he was crying. He was an employee in a private company, and he told that he was in a very financial crisis, and he has told his CA to help him out, and his CA has told him to reduce his tax by availing those deductions. He told that it is my mistake. I have only told the CA to help me, and he told, end of the day it is my choice, and I have chosen it. And it is my mistake, and I am sorry. Now it is very difficult for me to pay even for 6 lakhs. So he has no money to pay 6 lakhs also. And there is a penalty for 270A, as you know, it is 200%, because it is initiated under 270A 9, that is under-reporting consequence to misreporting. So it is that is 12 lakhs of penalty. So he told that I want to save just 1.5 lakhs, and I am ending up paying 18 lakhs. Because 6 lakh tax, 12 lakhs penalty, it is 18 lakhs. So he told, is there any way out? I told him, no way out, because it is going to faceless, and it is strictly 270A is not applicable to you, because it is under-reporting, misreporting, so it is not applicable. So there is no way you just plan to make the payment. So he told, okay, give me an installment, I am ready to pay. I gave him installment. Means today itself I drafted that installment. He told I can maximum pay 50,000 per month. Okay, fine, you pay 50,000 per month. If you are willing to pay, go ahead. Then he told, what about the penalty? And it will take another 6 months to be passed, and then he planned about that, you will laptop. Okay. So this is how, what I am telling is that because all of a sudden you never know that what is the policy of the government this year. You ask for, you just claim something, and all of a sudden that issue has been picked up that year. So whatever the profit or whatever you want to avail, it will end up into a huge tax liability because of penalty. Because penalty nowadays is 200%. It's a huge penalty. If it is imposed, means you think of 6 lakhs has become 12 lakhs penalty. You say how much dangerous it is. Then avoid inflated or bogus claim, as I told you. Keep email, mobile number, address and bank account details updated. Ensure PAN, Aadhaar and bank details are correctly linked. While the Income Tax Department increasingly offer enhanced technology-driven services to make compliance easier, taxpayers must reciprocate by fulfilling their duties honestly, timely and accurately. This partnership ensures smooth administration, improved compliance and a more transparent tax system. Thank you all for your attention and participation. We hope today's session was informative, valuable. Have a wonderful day.
Thank you, Dhiman. I know it has been a very engaging session and also tiring session. So we are coming towards the closure of the program. Now I call upon Shri.Priyadarshi, ITO Ward 431, to share our thoughts on recovery proceedings and also some procedural aspects, right?
Actually, main first I will tell you that one request, but आप सबसे पहले जैसे e-filing वेबसाइट है वहाँ पर अपना रिकॉर्ड्स अपडेट कर देंगे तो आई थिंक 50% डिस्प्यूट खत्म हो जाएगा वहीं पे. एटलीस्ट e-filing में रिकॉर्ड अपडेट कीजिए. एवरी 3 months अपना 26AS पोर्टल चेक कीजिए. 26AS पोर्टल में सभी ये इंफॉर्मेशन रहता है, जैसे आपका एडवांस टैक्स कितना पेमेंट हुआ है, सेल्फ असेसमेंट टैक्स पेमेंट कितना हुआ है. यहाँ पर क्या होता है कि मैक्सिमम एसएससी आते हैं वो लॉन्ग बैक 2006, 7, 7, 8 ऐसा केस लेके आते हैं क्योंकि उनको अभी डिमांड नोटिस रिसीव होता है. डिमांड नोटिस नहीं, रिक्वेस्ट लेटर से डीएफसी अभी इशू कर रहा है. तो प्रॉब्लम क्या हो गया है कि अभी हम लोग कुछ कर भी नहीं सकते क्योंकि अभी क्या हो गया है कि करेक्शन स्टेटमेंट अभी फाइल ही नहीं हो सकता. कि 31/3/25 टाइम बाइंग डेट था ये बोर्ड का दिया हुआ. तो अभी ना तो आप करेक्शन स्टेटमेंट तो फाइल कर पाएंगे ना तो फिर डिपार्टमेंट कर पाता है, वहीं पे स्टक हो रहा है. इसलिए माई रिक्वेस्ट इज दैट फर्स्ट ई-फाइलिंग वेबसाइट आप हमेशा चेक करते रहिए. अभी अगर आप लोग से पूछेंगे कि व्हाट्सएप और आपका फेसबुक में 5 मिनट्स बिफोर क्या आया था आपको सब पता चलता है. व्हाट्सएप तो 5 मिनट्स पहले चेक करते हैं लेकिन ई-फाइलिंग वेबसाइट आप चेक करने के लिए भूल जाते हैं. और अराउंड हमको लगता है कि 1 year 2 years इवन अगर हमको लगता है डिमांड नोटिस रिसीव होने के बाद आप ई-फाइलिंग वेबसाइट चेक करते हैं. सो एवरी टाइम एटलीस्ट वंस यू लॉग इन एंड सी then maximum faceless assessment, whatever notice is coming, you can tell immediately. So I think 50% or I think 60% problem will be gone if you check at least daily once. You can like WhatsApp you're checking na, WhatsApp or Facebook. If I'll ask this before half an hour what is the scam, you can reply very easily.
IT डिपार्टमेंट का है, WhatsApp कर देंगे.
So at least e-filing website आप मोबाइल में सेव करके रखिए. At least once you check whatever is coming.
वैसे भी I mean just on a lighter side, वैसे भी department keeps track of where you are visiting, how much money you are spending. I worked in investigation, so sometimes you should not post too many photos on Facebook.
That can lead to some other things.
Yeah, that will both personal and professional.
वो इनकम टैक्स डिपार्टमेंट को अपडेट हो जाता है, चोर को भी अपडेट हो जाता है.
ये मेन थिंग है, फर्स्ट आपको अपडेट करना है पहले. इससे क्या होगा, फेसलेस असेसमेंट कुछ भी रिकवरी प्रोसीडिंग चल रहा है, फेसलेस असेसमेंट चल रहा है, अगर आपके पास अपडेट है तुरंत मोबाइल नंबर अपडेट कीजिए, अपना ई-फाइलिंग वेबसाइट अपना अपडेट कीजिए. लास्ट 5 years बैक का वही चल रहा है, इसलिए प्रॉब्लम मेन हो रहा है. फेसलेस असेसमेंट का मेन प्रॉब्लम आपने अपडेट नहीं किया और आपको इन टाइम नहीं आता है. अभी मैक्सिमम आई थिंक 90% ग्रीवेंसेस वही है. TDS आप उसका क्रेडिट नहीं मिला है, मैक्सिमम 60% चालान करेक्शंस है, वो सब. वो प्रॉब्लम कहाँ स्टार्ट हुआ है, ई-फाइलिंग वेबसाइट में आपने अपडेट नहीं किया. मेन प्रॉब्लम वही, इसलिए आपने टाइमली रिस्पॉन्स नहीं दिया. इसलिए क्या ये आफ्टरवर्ड्स वी आर गोइंग टू रिकवरी. फर्स्ट रिकवरी में भी वही प्रॉब्लम है. सपोज क्या होता है कि आपने पेमेंट नहीं किया, असेसमेंट ऑर्डर फर्स्ट किया, असेसमेंट ऑर्डर पास होता है. आप जब रिकवरी प्रोसेस के लिए उन कोर्स इंडक्शन के लिए जाते हैं, एसएससी इज टेलिंग दैट दे हैव नॉट सीन दिस नोटिस हैज गॉन इन हिज सीएस पोर्टल, दे आर नॉट अवेयर दैट टाइम. Now, when we are starting coercive action, then they used to come, or bank attachment, they used to come easily to me that my business has come down and you please see. I have not seen that time. Then that time you are filing stay application. But the stay application rule is there that within 1 month you have to file stay application. So that also is not be entertained. Only some criteria, denying hardship and all we are asking. That also you are not giving responses. Denying hardship, any denying hardship is there. So this is the problem. The timelines, main thing is due date you have to follow. Due date and all everything you update all the records. Then I think 60% this dispute will go.
For genuine hardship, avoid using AI.
Then you can check Dresses portal daily. At least Dresses portal, e-filing website. And e-filing website 26 days at least you can see.
And send it everything in WhatsApp daily.
No, at least you can save in your mobile. You can check. So this is the thing that if a stay petition you can this recovery when we are starting coercive action like bank attachment we can so like 3-4 modes we can start coercive actions like bank attachment or garnishing proceedings or lastly the TRO will sell your property and last thing prosecution. We are putting in jail. Then that time you come fast to department. So better to avoid this, please update your records first. I will not take so much time. Actually, I want to tell so much.
Sir, any scheme is going to come, sir, like Shreenivasa?
Sir, anyway.
चल रहा है ना?
Any other scheme for TDS, sir? Under TDS?
TDS?
Yes, sir.
No, under TDS, I think 31st March 2025, correction statement also stopped.
Yes, ma'am. That's what any scheme is going to come, madam.
So many SSCs are coming.
Wait for some surprises. You never know.
Because
Anyways, budget is forthcoming. So we
now
have
we have
also.
stopped up to 1890.
Yes.
So that whatever unclaimed challan we have, that also we are not able to tag it or make the demand nullify. So one more 6 months to be given. Otherwise, for you also that huge demand is lying in your portal. For me, that is not a demand. If I just go and correct, then it becomes zero.
This problem we are facing in case of amalgamation, amalgamated entities.
Yes, sir.
Merger acquisition cases.
Amalgamation, normal TDS also. So many SSCs
Sir,
are
that's
coming.
not happening only. TDS merging in
TDS is the major problem
We
now.
are struggling so much for all our mergers.
Because we have not seen 26 A's in time. Within one year or 3 months, we have to always verify.
Actually,
Because,
for the deductor to find the updated is actually interesting.
And sir, one more thing.
Deductor कहाँ फाइल करें?
नहीं सर वो रेट्रोस्पेक्टिव ऑर्डर आता है ना तो रेट्रोस्पेक्टिव ऑर्डर में हम कर नहीं सकते हैं
Any questions?
So
You can ask.
this, the last session, maybe some 5-10 minutes we can keep for question and answer session, open house. Starting from the beginning of the program, what all things have been discussed. Any doubts anybody has? Yeah, our intention was not to make it technical. We wanted to engage with you. So that's why even if some attempt was made to.
Whether the SSC is small or big, the time limit given is 5 days, 7 days, 30 days, not even 30, 5 days, 7 days. It's not possible. Somebody will have 15 crores income and they'll say within 7 days you provide some 50 questions are given, all the answers. How is it possible? Have you studied the SSC first before sending the you have not done. Then how do you give a, why do you give a standard notice to every SSC?
Not every SSC, madam. It so happens that when the questionnaire is issued, first 142 questionnaire, at that stage itself, a lot of things are being asked for. So if the initial reply is furnished, I think the subsequent replies can also be furnished on time. But generally what happens is the SSC asks for time, and in the interest of natural justice, the AO also grants time. But then it cannot be an indefinite process forever. So the problem that often happens is that when a detailed questionnaire is given, the detailed show cause is given, that is the time when the SSC should respond effectively. And that generally happens towards December or January. It doesn't happen as a matter of choice, it happens sometimes because the SSC has not cooperated all that way. So the problem has to be seen from the other side also. And the assessing officer, as you said, whether any study of the SSS pattern is being made, so that is certainly being made because each SSC would be into a different sector. Each SSC will be having a different set of, say, one may be a PSU, the other may be some big multinational IT company. So that profiling is done. But when it comes to compliance, a definite date is given.
It's a very helpful session. We are struggling very hard with our merger cases. What is happening is even after we explain to the AO, he has understood the matter, he has verified everything. Again it goes to ITBA. Again there is a lag wherein even the AO says even if I want to expedite your matter, it's not possible. So we have cases like which are pending for 1.5 to 2 years, wherein they don't get a response from ITBA and they are raising this grievance from the back end. Is there any way to expedite this?
Actually, madam, in such cases, whatever you are telling, we are raising tickets with ITBA and talking to them also over phone to get the required solution. But in some cases only we are getting the solution, and in other cases solutions are not got by ITBA. This is a practical problem faced by most of the officers because in certain issues with respect to especially CPC and ITBA, we are not getting all the answers in all the cases. So there are only certain issues which can be resolved by the technical team, and in other cases we are yet to get some solutions because in spite of having worked out for more than 6 months and all, by continuously sending reminders to them, even after talking to them, we are unable to get solutions in some cases.
Sir, you please escalate from your side because it is creating so much hardships and we lose credibility in front of the client. They say as if we are not doing our work properly. Including, sir, in refund cases.
But I think one way of this too, you can also give an indemnity bond. I mean, saying that the credits have not been claimed by you earlier. I mean, credit has not been claimed by.
No, sir, this is not being accepted. They say the ITBA has to mandatorily pass the whatever order or anything, then only the TDS will get merged.
There is a provision where extra TDS credits can be allowed. TDS credits claimed by the earlier entity can be given to the new entity. The problem, I think you are talking about the resulting entity.
Yes, sir, resulting entity
Yes.
should get the TDS credit.
That is where the TDS merger should be ideally there and the credit should be, the flow of credit should be there. If for some reason the flow of credit is not happening, I think an indemnity bond can be taken and an affidavit can also be given saying that this credit has not been claimed in another PAN.
So that all has been verified. But only thing is to give effect to the order on the portal.
And also,
TDA has to
if that income on 26 days it is different.
So,
They are not like they are strictly told ITP that it's not possible to. Actually, one of my case, same thing. I have told ITPA to merge that two. I think same name, but they are giving solutions that it is not able to. They cannot do TDS merger. So in our system, one option is there, extra credit given by you. So you can give indemnity bond. And you can give indemnity that this again you cannot claim this TDS again this original company. So same thing we'll have to send to TDS CPC to block the TDS against that old company, and we can give the TDS to new company.
Okay, I will try this. Thank you.
thank you. We will try to close it, sir. You have a question? Yeah, please make it fast. Show some bold mark to signatures.
Sir, we are from KPTCL, Karnataka Power Transmission Corporation Limited, PSU, from Government of Karnataka. Sir, we are facing a problem of getting refund from the Income Tax Department from past 2016, sir. We got a OG from the High Court, around 14.68 crores of rupees to be refunded to the KPTCL. And partially we got the refund. From the last 1 year, we got around 8 crores of amount which is released out of 14.68 crores. And remaining amount also been issued at the time of 2020. And we are due for getting the refund of rupees 1.78 crores. And we are we are processing that paper from past 8 months in your office of Shreenivasa office. We have visited the office, sir, but we don't.
Actually, I have seen your case. What has happened is we have attended and sent it actually. Yours is a dossier case where a lot of demand is raised for earlier so many years.
Yes, sir.
And those demands are not actually fully paid or cleared. So that's why whenever we send this, actually CPC is not issuing refund. This is one issue with the CPC because in so many cases we are getting this. So we are trying to get it resolved. In some cases it is getting resolved, but in your case also we are trying actually. But we will again try it and get it resolved.
I am very sorry to raise this objection in this platform. Why? Because sir, we have personally met sir also. We have personally met the Mr. Kiran sir, who was earlier the additional commissioner also. We have raised this question many times and we have followed for this option for almost 8 months. We are coming to the Coromandel office. We don't have a lot of time to even attend that case, sir, because we have only ample of time to attend the other cases also which are related to other officers' issues. We have approached many of the times, but the office reply was very poor, so I am very unhappy. As we are a public sector undertaking, we are not an individual common person. Please make sure that the office responds well to the PSUs or anybody, even an individual who comes into the office. Sir, this is my humble request. Please don't take it in any other manner. No, you can visit us once again next week. Yeah, please, sir. I am not aware of the, as you mentioned someone else's name.
Yes, sir.
He was my predecessor. You
Yes,
can
sir.
come.
Yes, sir. Please, sir. I will definitely come, sir. Thank you.
And one more thing is we are attending to it. It's not that we are not attending, but it is some CPC related issues we are facing frequently in so many cases.
Yes, sir. Last time, your beloved officer, who is income tax officer, I don't remember his name. He sent the email to the CPC, but that is also been after 2.5 months. Sir, we didn't get any reply because, sir, even I am having a IRS officer as a finance director. He is making us to even for a week, fourth week also, even any time when he approaches to our section, he always asks this question because that amount has been not taken back from past 2016, and we are getting the statutory replace also, audit comment also on that. And as an officer sitting on the chair, we are facing very hectic problems on our credibility also, because they are telling that we are not approaching your office and we are not following up. But we know the factual or the known reality of the officer. Please, sir, don't take it in a negative way.
Thank you everyone. Just before we give the vote of thanks, I would like to inform the members that we have a felicitation program for the officers. Kindly please wait for some time. So with that, I thank members and the officials of the public sector units here. This was a fantastic awareness program jointly organized by the Income Tax Department and the Institute of Chartered Accountants of India, Bangalore. Officers with the enlightening sessions for the PSUs. Members of ICA would always be helpful for the PSUs. We can take their help, and also I request the officers to clear the grievances of the public sector units as early as possible. So with this, I thank everyone on the dais and also the members present here. We'll have the felicitation.
I complete the vote of thanks from the corporate department. Respected Chief Guest, Shri.Priyadarshi Mishra sir, Additional CIT Range 43 Bangalore,
esteemed senior chartered accountants, distinguished officers and officials from the PSUs, and respected members of CA fraternity, ladies and gentlemen, good evening to you all. So it's an honor and privilege for me to give the vote of thanks for today's event. So I start by giving the deepest gratitude to our principal CIT, Madam Susan George. It was her concern regarding the applications of condonation, delay in filing of return and refund related issues that this event today was necessitated. Our dear Sir Shri.Priyadarshi sir also had these same concerns. I appreciate sir for sharing your insights and your inputs on the different matters that have been discussed today, and it has been really enlightening for us, and your perspective on tax compliance and timely filing of audit report for verification of the ITR has really made this today's event very enlightening, and your encouraging words have added great value to today's gathering. So your participation today also shows on the part of the department that we are committed to have a good collaboration with the professional fraternity so that we could have more enlightenment of and clarity on the issues on which we are having concerns on a daily basis. So this professional collaboration, this technical sharing and mutual commitment to awareness and compliance is something we really appreciate, and we basically the nature of event is basically collective efforts and contribution has to be made from every one of you, and I am grateful that every one of you have come forward and shared your insights and asked the relevant questions. So more of these programs we hope to carry on in the near future. I'd like to thank Mr. Manjunath MCA who has very promptly taken the initiative and his personal involvement in organizing this event in a very short notice. So we were really grateful that we were effectively able to communicate the message before the third installment of advance tax is due on 15 December. So Senior Chartered Accountants of ICI Bangalore branch, your engagement in today's event, your guidance and has really enriched the experience in today's event. So as PSUs are also present with us, your guidance and your insights on matters is really what is required at this juncture of time. So special thanks to ICA Bangalore branch for providing us with this venue, with this wonderful podium arrangement with all the electronics interface so that the presentation could be effectively communicated, and also for the arrangement of snacks and high tea. It was really welcoming, and the hospitality was really felt. So I again thank the ICI Bangalore branch for this. So senior officials and officers from PSUs, it is really appreciated that you are making all this effort to come forward and attend this event. It shows that you have this intention to have transparency and cooperation in the matters of taxation matters, and whatever resolve issues you are having, it is here through these opportunities that you get it resolved, because every day it is not possible to come up and have a discussion on matters collectively, but it is events like this that help us together clarify each other's doubts. So members of CA fraternity, it is really it is really appreciated that you have turned up in huge numbers, and basically you are acting as a bridge between us and the taxpayers, and communicating and spreading awareness on matters where taxpayers are falling behind. So it is a collective responsibility, and we really appreciate that you are living up to your part of this responsibility. Also for this arrangement, I'd like to thank all the supporting staff, the technical crew and organizing crew who were involved in the logistics, the communication, the venue management, hospitality, who have worked tirelessly behind the scenes and made this event a smooth sailing. It is through your collective effort that our program was successful today. So in conclusion, on behalf of the Income Tax Department, I convey the heartfelt thanks to each one of you for attending this program and being a patient listener. So your cooperation, enthusiasm and partnership is what we look forward to coming events as well. And this collaboration with CA Institute and PSUs and Chartered Accountants, this is all of us being the stakeholders will continue over the years, and this is how through which we evolve as a society and we create more what you call a smooth moving system that enables lesser hurdles and more efficiency over the years. So I thank you once again and wish you all good health, prosperity, and thank you everyone for being here today. Thank you.